What up, y'all? We're live. Let me turn my volume down on my computer. My producer's telling me. Welcome back to Benzinga Live. Happy Monday, everybody. Welcome everyone joining us from Live Trading with Benzinga. Shout out Mitch for carrying the show today with Spencer out. I don't know where Spencer is. I thought he was supposed to be back by now, but we're speculating that he lost so much money in Vegas that he could not buy a plane ticket home. So I don't know what Spencer's deal is, if he'll be joining us remote today or what, but hopefully at some point. Yeah, Jadid, my face, I shaved, I got a haircut. Also, I do have to admit, I lied while I'm talking about my appearance. I lied on Friday about my bumpy eye disease and needing glasses. I actually don't need glasses. These are just blue light glasses, but I'm workshopping them right now. So if you like the glasses, let me know in the chat. If you think no glasses, let me know. Glasses, no glasses, glasses. All right, guys, we've got a lot to talk about today. Of course, top headline of the day is Elon Musk disclosing a stake in Twitter. Now, if you follow Elon Musk on Twitter, Elon Musk has been talking a lot about his problems with Twitter, about the algorithm, about Twitter banning and suspending certain people. He asked in a poll, do you guys think the Twitter Twitter algorithm should be open source, meaning it's just public info that people can work on? And he even clarified in this poll that the results of the poll would be important. So now you could infer that as he's taking this stake, as he's getting voting rights, he's going to try to push for this. He's going to try to push for the open source code to be public, if I had to assume, some less banning and suspending and stuff, because he's been an ardent supporter of freedom of speech. Say what you want about Elon Musk. He wants to see a Twitter that where the company is not, banning or taking certain content off there. So if you guys, we'll do a quick rundown on kind of the history of activist investing. Of course, Carl Icahn is seen as, pun intended, an icon in that industry and kind of one who revolutionized it. So we'll talk about Carl Icahn. We'll talk about Ryan Cohen, sorry. But all right, guys, let's go ahead and get the show started. I'm going to play that intro while I'm doing that. Please smash the like, subscribe if you have not already. We'll talk about some trades. Let me know in the chat what stocks y'all watching. I can see Taylor's watching AMC. Shout out Taylor. We'll check in on AMC. All right, producer, set that intro.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from Trend Spider. We have a breaking news.
All right, guys. So, like I said, gave you the rundown of kind of some of the things we're going to talk about. Well, really just top headline of the day so far is that Elon Musk Twitter news. We're going to talk about what he can potentially do at Twitter, what this means for the stock, and how to trade it in the meantime. Because right now, look, guys, Twitter stock is already up 25% today. Am I going out to rush it to buy it here while it's up 25%? No. But do I think there will be a trade to be had in this Elon Musk situation? 100%, because this is just the first catalyst that this whole situation will bring us. Is the first catalyst is the fact that the stake is disclosed, right? So we will get more catalysts as time goes on. Maybe it's about who Elon Musk wants to bring into their board, or who he wants pushed out of the board, or what kind of policy changes. Of course, we hinted at that the fact that to make the code open source for the Twitter algorithm. Sorry, guys, I'm just pulling up the stock on BZ Pro, and I'm going to show you guys how you would have kind of seen this news in Benzinga Pro. This is where I found out about the news. Of course, if you're just an overview of Twitter, you can go down here to the news feed. The very first thing that hit in, so you can see right here, the report came in, the actual SEC filing came in at 6:08. We had the headline up that the stock was up, or that Elon Musk had a 9.2% stake in the stock less than 2 minutes after that. That's just crazy speed there from the news says. So if you're someone that's trading in after-hour sessions before the markets. A lot of times these stocks, usually any time a stock is running like this in the pre-market, it's off a headline or some sort of catalyst. So always great. That's like the first thing I do in the morning to check my stocks to see why they're moving or not moving in the pre-market. But while we're talking about Elon Musk, right, we got to run over to Tesla, who's also having a pretty good day. I guess Elon's just having a good day all around today. So Tesla announced that its delivery numbers actually beat the previous quarter. And this is for Q1. This comes in a quarter where basically all other major auto manufacturers, whether you're talking GM, whether you're talking Ford, whether you're talking Volkswagen, saw declines in sales. And Tesla posted a beat, albeit by not that much, less than 1% increase from its cars delivered in the previous quarter, but a beat in a very tough quarter nonetheless. And we will talk about that because I do have thoughts and maybe why it's not as great as it seems. Dun, dun, dun. Quick rundown of the guests we have coming on the show today. It is Monday, which means, of course, we will have Matt Hammond join us to talk about some IPOs, what he's watching this week. We'll check in on some of the IPOs that he talked about last week. And then Jake Wujastyk from TrendSpider at 1 p.m. will be running through the charts. Let me know, again, guys, what y'all are watching in the chat. I know which stocks I'm watching. I'm actually going to pull up my my Robinhood because I'm not having too bad of a day. RJ, let me hit up the crypto news desk. Or Brent's in the chat as well, because I don't know. Most of the times with crypto, it's not specific headlines. It's more just kind of technical moves and everything going on from a macro perspective. But we'll check and see if there are any specific news catalysts for why cryptos may be moving. I'm gonna share my Robinhood. I'm having a pretty good day because I basically YOLO'd some TQQ calls last week, as you can see right there, up 100% on those. Boom! Can I get a cash register? Ring that cash register, baby. Actually, I shouldn't be allowed to use that sound until I sell, because you can't ring the cash register until you sell. But these are basically all the option contracts I have. I was liking 3M. Oh, okay. 3M actually came up today. It was down 2% at one point today, which I can check in on Benzinga Pro exactly why that was, if there was any reason. But I was talking about last week how I liked 3M setting up for a swing trade, just because we've gotten it was clearly in a downtrend, right? I'm on a 3-month view of a not great chart here, because this is I could expand. Actually, let's do that. Let's expand it to the candle charts. Better charts on Benzinga Pro, but I'll check here anyway because I'm already here. The 3-month chart, we can go to a year too. You can see this was just in an ugly downtrend. But anytime I see a stock, and especially a value stock like 3M, that's a big company that has a low PE, that has a high dividend yield, especially with a stock like that, I'm watching for a bottom, for some sort of consolidation for investors. Because at this point, you're not just talking about retail traders or people buying options. You're talking about big institutions, your Morgan Stanleys of the world, your JP Morgans of the world. You're talking about those guys coming in and buying substantial shares. Because again, you have the valuation, you've got the low PE, you've got the low price to sales, you've got all the metrics that you want, and you've got a strong dividend. So for a lot of these people, you got to think about what the average institutional client is, right? They're people that make a lot of money, which means a lot of times they skew older, right? JP Morgan's main client isn't, 25-year-old me who's, I'm not going to say how much I make, but not making as much as say like some executives or whatever. If you're like 55, 60, making hundreds of thousands of dollars a year, and you've made X amount of millions throughout your career, those are the institutionals, guys' key targets, their key clients. And they move a lot of those clients to stocks like 3M that pay good dividends, because they can buy a lot of shares of them and say, hey, look at all this money you're bringing in every single month from dividends. You can just live off that. You don't even need to, you can retire 10 years early. So a lot of these times with stocks like this, you wait till, you just see some sort of break from that downtrend, which to me, I liked this action down here. I'm not like this company has problems. They've got a big lawsuit going on with some of their earplugs, but I started a position in this in my Robinhood, and I was swinging some calls, but not a great day today. The calls are, yeah, I mean, you can see I'm down 71% on the calls, so not a great pick there. But it was just one. It was basically a kind of a YOLO, and 3M is not a stock that I would typically trade options on because it's not a stock that moves a lot. But with that said, if you buy options on a stock like that, a stock like 3M, a stock like Procter Gamble, a stock like GM, one that's not a crazy mover like Robinhood or Tesla or something like that, the implied volatility is lower. So that means if you do get that move, the contracts become inherently worth more because that implied move was never expected, or it wasn't priced in as likely. So then if you do end up getting that 10% move on 3M, it's like a double whammy, right? The price is moving in your direction, and it's just like, holy shit, we didn't expect 3M to move like this. This isn't, NVIDIA. Sorry guys, just catching up with the chat real quick. Brent, I agree. We should get there in seconds, but we will. Crypto's consolidating for the week. That's what I'm saying, Brian. It's typically, more chart, more technical moves with crypto. You do get sometimes big headlines with crypto. I'm trying to think. I mean, in the last year or so, the top ones that come to mind are, of course, China cracking down, ramping up its regulation of crypto and crypto mining. You, of course, have on the flip side, from a bullish standpoint, Tesla investing in Bitcoin and some other big companies getting involved. And that was when it was like, oh, holy shit, this is not just, crypto anymore. This is mainstream. This is institutionalized. So you do get those rare headlines for crypto, but I'd say, I don't know, 8 times out of 10, 9 times out of 10, any big moves in crypto are more just chart technical related, how people are trading it. Buglug, did you win some swag? Do I owe you some swag? Let me know. Email me, shows@benzinga.com. I can check old emails, though, so I'll know if you're a first time someone just asking for some swag. But we will have a chance to win some swag today. Yes, get a very nice free Benzinga t-shirt or hat if you win a contest we're going to do later. I think we're going to do a Guess That Chart today. So if you've never played Guess That Chart today, it's essentially we just throw up a chart without the price or the name of the chart, and you have to guess which stock it is by that chart. Maybe we'll have a secondary way to win some prize as well. Buglug, I'll think of something. All right, guys, so let's go back to Elon Musk real quick, and I'm going to pull up his Twitter because he's been tweeting a lot about Twitter on Twitterception there, about kind of he hasn't been too happy with how Tesla has done, or not Tesla, sorry, Twitter is doing everything, right? This was back on March 25th, I believe. Yeah, so here on this thread right here. Oh, I gotta share my screen. All right. Free speech is essential to a functioning democracy. Do you believe Twitter rigorously adheres to this principle? It's Monday, guys. I can't read, but I'll get better at it throughout the week. He goes on, Musk goes on, the consequences of this poll will be important. Please vote carefully. So he is essentially saying, he's just laying out there, look, if the majority of people, if more than 70% of people believe that Twitter is not adhering to the principle that free speech is essential to a functioning democracy, then he wants to do something about it. Now we have clarity, and he actually made his investment in Twitter before this, on March 24th. So when he says the consequences of this poll will be important, I remember like thinking in my head when this happened, oh, if the answer is yes, like he might go out and try to start his own version of Twitter or something, which honestly, out of all the other versions, probably would have had the best shot when you take into account Gab, Parler, which I do have some thoughts on those, or at least on Gab, because I saw something funny kind of going on in regards to this. I think it was even in this thread that I saw this about Gab, which I thought was really funny, but that'll be a side note because it's not to the main point. Essentially, Musk, so again, on March 24th, he had already made his investment in Twitter, then puts this poll out there. He wants to know kind of, okay, what can we do about it then? And his answer is buying a stake in Twitter large enough that he gets voting rights, he gets shares, and he'll be able to make something happen. I mentioned we'll talk about Carl Icahn. We can talk about what he's done at companies, but essentially by just kind of using this new stake and not letting down and what Musk wants to see, and especially, and this is important, especially if he has the backing of the public opinion, he'll be able to go to Twitter and say, look, 70% of your users agree with me. We should make this algorithm open source code. Now, Twitter and their legal team and its legal team will have ways to kind of battle this, try to get around it, saying, oh, we can't make this code open source. It would be bad for our business, or it'd be a privacy concern. Whatever it is, right? There will be pushback on some of these measures because there's a reason that Twitter hasn't implemented some of these measures in the past already. And so if Elon is able, and two, there's the making the algorithm open source code. That's one thing that Elon Musk wants to see happen. The second thing is just seeing less accounts banned and less content suspended and whatnot, or taken down. Just less censorship in general. Like, I imagine, I don't know because I haven't asked him this specifically, but I imagine Elon Musk did not agree with Twitter banning Donald Trump. I'm not saying that for like political reasons. Like, if they would have banned Joe Biden, or if they banned Joe Biden, I imagine Elon Musk would be against that as well, because he seems to be just a proponent of freedom of speech. Although he has gotten backlash because Tesla fired an employee a couple weeks ago, or the news came out a couple weeks ago at least, after the employee made some YouTube reviews of, I don't know if he was reviewing Tesla itself or some different EV cars, but either way, people are just like, didn't you fire someone for posting something you didn't like online? Like, how can you try to be a proponent of? So he is getting some criticism, but for the most part, people are lauding his efforts to try and make Twitter more of a place where it doesn't seem like content and voices are being controlled by Twitter. And that's just been a problem that it's not even a political issue. I mean, people on the right and left have brought that up over the past couple of years, just that Facebook, Twitter, Google are becoming more and more powerful in terms of the information that we consume and, of course, disseminate the information that we also pass along. So I support Twitter becoming less regulation, more free speech, because at this point, Twitter has essentially become a forum of public discussion. So if you take that away from someone, in a lot of ways, you are taking them out of the public discourse. Twitter can make the argument that, oh, when we ban Trump, we're not taking away his First Amendment rights, because he can still go out on the street and say whatever he wants, or he can write a newspaper article and distribute it out to. He still has his freedom of speech. That's Twitter's argument. But in reality, 90% of discourse these days happens online, in between Twitter, Facebook, Instagram, Snapchat, you name it. Like, so in a lot of ways, if you're taken off social media, you are taken out of the public discourse. But then also the other side to that is that Twitter, like thinking back specifically to COVID misinformation, Twitter at the end of the day is a private company. They have a shield, Section 230, that shields them of liability of what other people post on their website. But they could still say, we're worried about liability of someone coming to us and suing us because this information got passed along COVID. So I understand from a private company's perspective, which again, that's their First Amendment right to do so as a private company, saying we need to take some of this information off. I'm not saying I agree with it. I understood their reasoning for it at the time, specifically to COVID misinformation, saying, okay, we don't want people on here saying this thing doesn't exist, that's actively infecting people and harming people's lives. We don't want to be essentially a bystander in that. I understand it. But with that said, I still would err to the side of freedom of speech. Let that out there, and then let people tear it down. Let people say why they're wrong. Like encourage that debate. But I don't know. The waters have been muddied. It's a very weird time, so we shall see. Twitter needs to die. I don't know. I mean, I honestly love Twitter. I go on Twitter a lot. It's probably one of my most. I'm like a new. Like I follow 900 people on there. Probably 500 are journalists. Like I use it for like news, sports, staying updated. I see a lot. I find out a lot of things on Twitter than other things. Yeah, Nick's making some good points in the chat. We have a representative democracy, not a direct democracy. That's why, honestly, one of the let's just get into ticker time real quick. There are a few. Oh, Kylie, thanks. Oh man, I'm getting roasted. All right, that's fine. Let's take some tickers from the chat. I will say on Nick's point of direct democracy. Well, that's why I think one of the simple policy changes is just having more. Issue polls directly to the public. Just ask the public, should Twitter be able to ban people? Yes or no? If 80% of America votes no, then boom, that's a law. The fact that we have to elect people and then they get to decide on the rules without us deciding directly, it irks me as well. PTLO. I see. We'll check in on PTLO. Honestly, I don't know what. Oh, this is Portillo's. So for those of you that don't know, because I don't think this is a nationwide thing. I think Portillo's is just in the Midwest. But I'm from the area. So Portillo's is like a fast casual, known for their hot dogs, but they've got other things too. Italian beef sandwich. They've got shakes, salads, sandwiches, you name it. IPO'd last year and actually did really well. It kind of fit the narrative of these different food stocks that have IPO'd and done really well. We can pull up Dutch Bros as an example. If you're in the West or the Pacific Northwest, Dutch Bros. It's a Starbucks competitor, or maybe more of a Dunkin' Donuts competitor. I don't really know because we don't have them here in Michigan. But Dutch Bros, you can see down here, IPO'd at like $32, ran all the way up to 70. It basically doubled in a few weeks. Is this right? I thought Dutch Bros ran more than that. No, I guess not. I guess it reached highs of about 70, but still pretty crazy. Dutch Bros will go back to PTLO. So I haven't looked too much into this. Let me see in the chat who is asking about it. Tot Jag asking about Portillo's. I haven't looked too much into the fundamentals, like how much money Portillo's is making, what kind of earnings they're reporting. But from just a chart perspective, I don't hate the look of this, right? It looks like to me we could be in a rounding bottom where we've found some consolidation. The stock has come down to a point where buyers are coming in. You can see right here that we're looking at daily candles right here, three daily candles in a row. That's a good sign for me. Even more recently, 4 here with a big green candle, a 7% day. And that's normal, right? If you have 4 green days in a row, especially with a 7% day thrown in there, you're due for a little drawback. And a lot of technical traders, people that rely on Fibonacci's, will tell you look for a 50% drawback there. Get down here, you found some more consolidation. So let me know, Total Jag, who asked about this. Let me know what you're looking at it for, like a long-term investment, a swing trade. I'm not exactly sure kind of your thesis on it. But as far as a swing trade, and again, I'm just looking at the chart, and I'm by no means no technical expert. I don't really claim to be, but I can identify some resistance, some support. It doesn't look too bad. I would consider, and if I were going to get in on this on a swing trade, I would set a stop loss like here at $23. So if we do look to come back and test these lows, which looks like we got as low as 24. Is this right? 21.38. Sorry. We got down to 21.38. So that would be my level right there. If we come back and test it, I'd like it there. And then you can put a stop loss down there. Or if you're trying to swing this back up here. Because then if you zoom out, you can see downtrend, consolidated bottom, and then I like them to come back up. Here's a stock that has a good example of one of those rounding bottom charts. BTU. Right, you can see right here. Down, 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 found some consolidation. And what does it do? Boom, 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 comes back up. And now this, so I will say this. This is going back to December of 21. I think this is how Peabody was going to trade anyway. But then, of course, here is where energy got its lift from the Ukraine-Russia war. So this chart is helped out by some very unfortunate events. But I think, again, that the chart was kind of setting up for that. Anywho, that's just a beautiful rounded bottom chart right there. Let's see some other. All right, Holly, this is a good segue into what I wanted to talk about next. So we've talked about, oh wow, Tesla breaking out here. Or no, sorry, selling off. We started the show, we were down here, these red candles in a row. Then we got a couple green candles, now coming down again. So Tesla reported, I mentioned earlier, reported pretty strong delivery numbers in the previous quarter. Compared to Tesla's quarter from the quarter before that, I believe it's Q4 of last year. Well, here, let's just check real quick. Unless they already, okay. So they announced Q1 of this year. So from what I assume for Tesla is January through March. Deliveries of about 310,000, which beat Tesla's Q4 deliveries, albeit by not that much. I think less than like 1%. And the stock's trading up on the news, right? You say, okay, that's great news. Tesla beat deliveries. Not only did they beat deliveries, but Tesla beat deliveries in a quarter when other major auto manufacturers, whether you're talking GM, Ford, Volkswagen, you name it, saw down quarters. That's always a great sign. If you're able to beat competitors when they're struggling and you're doing well, that's a great sign. But I think, and again, Tesla is just one of those stocks. It's one of those things, really, that is just incredibly polarizing. And I really try, and I say this as someone who also understands that I probably do have I definitely have some sort of implicit bias in Tesla one way or another. I mean, I'll say this, I'm a shareholder, but I try to see like kind of both sides. And I don't think this is going to end up being as great. I'm just talking about the delivery numbers here, and I'm sharing my screen here to go to Twitter. I gotta change what we're looking at. And this is why I just bring up the bias, because Gordon Johnson is longtime Tesla's, maybe its biggest bear. So he's gonna be biased against every time he sees something bad about Tesla. He's gonna see, oh my God, see, I've been right all along. Tesla is Elon Musk's a fraud, and he's not going to see things clearly. But the same way, it's like it goes the same for bulls. I think Tesla bulls see things and they say, "Oh my God." Again, I'm a Tesla shareholder. I believe in the future of Tesla. I believe in the future of green energy. But some of the things, like some of the predictions, some of the things I guess some Tesla bulls say to me irk me, because it just is like, I'm a shareholder. I want realistic expectations of what I can expect out of this company that I'm invested in. And it does frustrate me as a shareholder, the fact that Elon Musk has repeatedly kind of thrown out promises or deadlines and missed those deadlines to a point where I don't think it really matters anymore. I don't think it matters that Elon Musk, I don't think it matters when Elon Musk says a deadline and Tesla doesn't hit that deadline, because it's happened so many times that it's not news anymore. It's just one of those things that's like baked in. But here's something that I thought was interesting, and this isn't, someone speculating anything. This is just objective. This is from the quarter report. We can look at the Q1, the first quarter for this one, and the one from Q4. Tesla changed what it classifies as a delivery. So here's how the footnote read in Q4 of 2021. So this is 2 reports ago. Our delivery count should be viewed as slightly conservative, as we only count a car as delivered if it is transferred to the customer and all paperwork is correct. Final numbers can vary up to 0.5% or more. So in this one, this is going back 2 quarters ago, Tesla is actually saying we might underestimate our deliveries because we're only counting cars that are in, the keys are in the hand of the customer, paperwork is signed. Now we go back to the one that was released over the weekend. Tesla vehicle deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors, including the cost of sales, foreign exchange movements, and mix of directly leased vehicles. So here's where, again, like the bears come in and say, oh my God, Tesla's skewing its delivery numbers. They changed. They didn't really say that. They just didn't include this part of saying final. So the numbers could end up being very similar. Or by omitting this this part in the language that they had 2 quarters ago, they're saying some of these deliveries that we're including in this quarter aren't final, aren't paperwork finalized. Maybe they're on the way to a dealership where the dealership says, oh, we have so many buyers, give us as many cars as you can, and we're going to get them all sold. Who knows why they took that out or what happened there. I am of the camp just saying, hey, let's just, kind of wait and see. Again, I do get frustrated with the I guess lack of concern when Elon Musk makes a deadline or makes a promise and misses it. I think especially if you see that out of a more legacy company, right? Because Tesla still gets seen as, even though it's a huge company now, it still gets seen as this innovative, not startup obviously, but kind of startup culture disruptor. If I saw GM or if I saw Ford's CEO saying we're going to have X amount of cars or we're going to have a car out at this price point and they miss, that's a huge deal. And that'd be a huge red flag for me. Jadid, yes, but some states, I don't know, something weird with how Tesla does it in some states. I think some states require that Tesla sells cars through a dealership and not through their own or something like that. I'm not quite sure. But yeah, either way, let's go back to Benzinga Pro. Tesla again. It's actually coming down a little bit from where we were talking about it. Holly, from a chart perspective, I don't know where you'd be looking at it. But look, anytime you have a stock 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, up 10 days in a row, couple red days more. Let me get an exact. Let's see how much Tesla is up just in the last, I don't know, month, 2 months alone. Sorry, y'all, just doing some quick math. Bottom line is, Holly, I was, my whole point in bringing that up was I really don't think, Tesla's up 27% in the last 40 days. I think you're due for a pullback. I don't hate a short here. With that said, it's Tesla. I've lost a lot of money buying Tesla puts. I've lost a lot of money, or I've seen a lot of people lose a lot of money shorting Tesla. So I guess do it with caution. When I say I never people that actually short the stock, write the stock short, are hoping, over time the stock goes to zero. No, when I'm saying I short Tesla, I'm saying if I see it overextended like this, I've in the past bought weekly puts that are relatively cheap while looking at Tesla options, saying, okay, if Tesla does come down 3% here, corrects a little bit, at least I'm covered in these puts because, again, I am a shareholder. So if I don't cover myself in the puts and Tesla stock crashes, and I'm screwed the whole way, I'd rather be in. But yeah, Holly, I agree. What goes up fast comes down a little bit usually. That's not saying, oh, Tesla's going to give up all these gains, right? Let's look at the chart. This was down at $760 on March 16th. So we're not even a month out. In the last month, we've gone from about $700 to almost $1,200. Literally almost if we run a little bit here, we could be talking about Tesla stock doubling in a little bit less than a month, but we'll see. I think, again, you're due for a pullback at some point, but you just got to be cautious with it. Holly, let me know in the chat how you're looking at shorting the stock? Are you just going to buy some weekly puts? You're going to buy some puts a week out? Because however you do it, I'd be curious, and I would put I would only put money into it. I would only put money into it that you wouldn't afford losing, because I've learned the hard way. Even when all signs point to a pullback in Tesla stock, crazy things can happen because it's Tesla and it's Elon Musk. Yeah, I see people talking about the World Cup. World Cup is in the fall this year. It's going to be slightly different. I don't know why. I think it's just because that's when, I think, like, maybe weather-wise, I think it's in Qatar. I don't know how to say it. Maybe it gets really hot and they have to do it in the fall. Not quite sure. I do want to check in on some crypto stocks because, and this is what I think is really interesting, Bitcoin and Ethereum aren't really having a great day. Going back 24 hours, Bitcoin's down more than 1.5%, and Coinbase is up on the day. And to me, that is very, very interesting because I lost. Well, Patrick Starr, it depends on what you consider like lost. Because I don't think I lost any money technically, but I would have made like $1,000. No, not that much. Probably like $600 if Duke would have won. So would you consider that me losing $600 or not? Because I didn't really lose the money. Oh, shoot, Nick, that's the worst. Yeah, and especially with short-term options trading, like if I buy puts that expire this Friday, a pop or a drop, if it goes against you, like can kill like 30% of your position. And then you can sell it, and then 30 minutes later, the stock's moving the other way, and then like your original thesis works out. It's the most frustrating thing ever, but it's also the hardest thing in the world to try to like stick to your guns, to stick to your thesis, to say, yeah, I think this stock's going to go up 5% this week, or go down 5% this week, and then it starts moving the other direction, right? You're going to keep looking at the chart, say, I think Nick said he had AMD puts. Yeah, I mean, if you had, like, say I had AMD puts when the stock's at 110, and I feel really good about it. The stock's at 110. I'm buying 105 puts. Now the stock's 111. Okay, whatever. It's still going to come down. Now the stock's 112. Uh-oh, now we're $7 off the strike. My options are now 20% less. Now AMD's 113. Oh my God, the stock's just moving the other direction. You sell them. The next thing you know, the drop comes, and oh, dude, yeah, Chelsea did not Chelsea did not have a good weekend. Chelsea did not have a good weekend. Oh, Nick, I hear you. I don't really have experience like actively shorting a stock, just kind of buying long puts. Yeah, so let's pull up the news in here in Benzinga Pro. Saying we have, let's go straight to the BZ Wire. What is the Coinbase news in India? Okay, Coinbase to invest in Indian crypto and Web3 amid tax regulation clarity. I don't know if that's what's moving the stock today. Either way, I see it as a because here's what I could see something like this, why Coinbase would be up on a day where Bitcoin is down. It can be something like maybe there are some metrics coming out pointing to that Coinbase's trading volume could be higher, right? Maybe investors, like institutional investors, are seeing Google search trends for Bitcoin and Ethereum are rising again. Because, I mean, let's face it, right? A few weeks ago, when Bitcoin was at 35,000, 35 or below 40,000, we'll call it, it was worrisome and wasn't that interesting. But now, since then, we've gone up another 20%. I mean, Ethereum is back at the mid 3,000s, and it's interesting again. And it just shows kind of the cyclical demand of crypto. You have these bullish patterns, and then you have times where people sell and take profits. But right now, I do think Coinbase is interesting, right? You're looking at a stock that's at $190 right now. Of course, this went crazy after the IPO, and this was back in November of last year in 2021 when Bitcoin was at like 65,000, making new highs. Coinbase got all the way up to $350 a share. And that wasn't even, counting the crazy, it got up to like 500 during its IPO day. And I mean, you're investing here. I don't think you need Bitcoin to go crazy for Coinbase's stock to do well here. I think you just need to avoid a big sell-off in Bitcoin that drives people out of the market. That's Coinbase's biggest problem. Is if there's a big sell-off that brings a lot of people, a lot of retail investors out of the market, that's Coinbase's biggest the biggest bear case. The biggest bear case for Coinbase. Sorry guys, just checking up on the chat again. Let me know what you guys are watching in the chat here in about 3 minutes. I'm going to bring on my guy, Matt Hammond. We'll be talking some IPOs, talking some IPOs. There we go. All right, guys. Coinbase. Let's check in on some of our other stocks we've been watching. Asana up 4.5% today. Let's check in on Sunrun. Woo! Sunrun up 9% today. This was, I don't have it. I think Spencer does, but this is just funny because I can show it, watch with the chart here. We have a lot of fun, different kind of challenges and games we play on the show, but one of them was the beginning of the year. We picked a 2022 stock of the year, and my whole thought process when I was picking this was like, all right, I'm gonna be in this spreadsheet with like 100 other people. I gotta get a stock that's gonna have really good returns, right? 20% ain't gonna cut it. 30% probably ain't gonna cut it. I gotta find a stock that's gonna go up 100% this year. And I picked Sunrun because it had gotten beaten down. And just real quick, if you guys don't know Sunrun, it's a big player in the solar space. Sunrun stock got all the way up to $100. That was, of course, when like markets were just going bonkers with COVID. Back in the first part of 2021, stock got all the way down to $30. This is when I made the pick. Right here at this point of consolidation in the chart, saying, okay, it's at like $32. I think we can get to 60 by the end of the year. And then for the next like 3 weeks, the stock just absolutely took a nosedive, went below like $20. And that's where if this was an actual investment for me, I probably would have sold. I probably would have said, all right, now I'm down, 40% on my investment. It's time to get out. I got to cut my losses. And then what do you know? Stock absolutely ripped up, of course, helped like all energy has been by geopolitical events. But now my stock, I think I'm in the green from where I picked it on the chart. But for a while I was in dead last I was in dead last in the challenge, and now I'm back in it with Run. So we'll check in on Run. We'll check in on DocuSign. Basically, it looks like all these Cathie Wood stocks are doing pretty well today. Yeah, wow. ARKK up 4%. Man, woulda, shoulda, coulda, but I was looking at some, I guess I still could. I mean, looking at this chart, like I'm looking at some swing because I just don't see, at this point, everything with interest rates looks to be like so priced in, unless inflation somehow gets even worse than it already is. I don't see how some of these growth stocks, some of these Cathie Wood stocks don't come back into favor. Checking on some specific names. Wow, Unity Software having a big day. ATVI. I was just checking in on them because there was some news last week, right? They're looking into the deal. They're looking into the Activision Microsoft deal because I guess there were a lot of let's call them suspicious options trades coming in the week before the deal was announced after those same traders or same investors happen to meet with the Activision or Microsoft CEO. It doesn't sound like to me you need to get Sherlock Holmes on the case, but I guess they're going to do their due diligence, look into it. But the deal, the Activision Microsoft deal, that could be a potential roadblock in it. Saw some headlines about that last week. Unity was having a good day. What are some other video game stocks we can check out? Take-Two Interactive not having as good of a day as Unity. What about Roblox? That's more Unity's speed. Yep, Roblox up 10%. $50 on this one. Wow. I remember when we were trading this one above 100, it seemed like maybe it was just that 1 week that we were above 100 in Roblox. But anyway, we hung around like 80, $90, now down to 50. All right, guys. Let's go ahead and bring our first guest of the day on, Matt Hammond from IPO Warriors. Link is in the description. We're going to be talking some IPOs, some IPOs, my favorite. Let's get Matt on the show. Matt, how you doing?
Pretty good, Aaron. How you doing?
Good. No Spencer today, so you are stuck with me.
Nah, it's all good. I love having you. I love having Spencer, Mitch once in a while. It's good to mix it up a little bit. Keeps us sharp.
What do you want to give us a quick update on how everything is? Just you still in Portugal? You still in Lisbon?
Actually, we moved from Lisbon down to Albufeira. For those of you who aren't familiar with my situation, we left Ukraine 2 days, less than 2 days before the bombing started. We were in Kiev. You've been hearing about Bucha in the news. That's where all those terrible pictures of bodies in the roads are. That's actually where the hospital where my first daughter was born is in Bucha. So I've been in that area quite a bit. It's only about a 30-minute taxi ride from our apartment out to Bucha. And that was where we were planning to have our second child. My wife is pregnant again. So, one of the things we're kind of focused on and dealing with is we've left the country. We are now in Algarve, which is the southern region of Portugal, which is nice. I mean, we're starting to get some good weather. We didn't really have a whole lot of rhyme or reason. There wasn't a lot of planning that went into it. It was just kind of get out. First, we went to Poland, realized that was going to get flooded with evacuees. So, we thought, well, Portugal's not too expensive and kind of nice in the summertime. So if this ends up being sort of an extended situation, which now it kind of for sure seems that it will be, we'll at least be in a nice area. And I guess we'll figure out the hospitals for the pregnancy later. That's turned out to be a little bit of it's a little bit of a challenge to find. There's not a wide range of options here, and they're not quite what we had with the private hospital that we already had paid for in Kiev. But we're making it work. We're I'm back to a somewhat normal schedule. I'm able to start trading again. We got some really hot IPOs, or at least one last week that we called out perfectly on Monday. We said, I think we're going to get one good runner this week. We said which one it would be. It did as we said it would, and that always feels good. So just kind of getting stable, getting our heads on our shoulders, getting our feet back on the ground, and trying to make the most comfort as we can given the unpredictability of our situation. So not a lot of stability yet, but kind of step by step adjusting to a reality that we never really even to the extent that we kind of had a backup plan. It was something we did enough to keep ourselves out of real danger. So that's, I guess, what matters most.
Yeah, I mean, obviously, I don't need to tell you, not the ideal situation, but I'm glad that your family is safe. I'm glad, it sounds like you guys, or at least you yourself, are coping well, and I hope the best in terms of, that you guys figure out the best plan for your wife and everything. Because it sounds like a nightmare to be dealing with a pregnancy and that. But silver lining, kid's gonna have like a crazy story, right? You're able to say,
yeah, sure. Yeah, we're all getting a good story out of it. It's good life experience, and it's not easy, to be honest. There's times where it's just overwhelming, and you just kind of got to take a deep breath and say, okay, just what do I need to be doing next? It's hard to focus on work. It's not always easy to focus on the next thing. It's easy to just get caught up on what do we do, and not having ideal answers makes it harder to answer those questions. So you just kind of make a list of 3 things you can do, tackle the first one until you get kind of stuck, tackle the next one, and then, give yourself a chance to take a deep breath, go play with my daughter for a little bit, reassure my wife, and then come back and just try to keep plugging along. But, you just got to kind of understand that things do get better. Things that you don't plan for happen in life. And that's sort of just the way that the ball bounces sometimes. And at your lowest points, yeah, things can get worse, but usually if you give it enough time and put in the effort and have the right attitude, they'll get better. So we'll get through this. And talked about it with Spencer a couple times. The market, can be a great way to take your mind off of things. You don't even have to actively trade. You just kind of like watch the market, look at things, put yourself in one small trade that's not going to matter one way or another, and play it out a little bit. And it can be like, I know for me, sports is like that. I don't have any time or outlet for that right now, but playing music, playing sports, trading the market, maybe they don't seem all related, but they are the kind of things that can put your mind into sort of a flow state where you're not focused on, the problems in your real life. So anyway, shall we jump into some IPOs?
Let's do it. Like you said, nice little distraction. So go ahead. You're sharing your screen and give me what you got for this week.
Well, let's review what happened last week, because much of what we're playing here is
let's do that.
And patterns.
I was just gonna say I might have to pop off for like 30 seconds, but just keep going. You're still here.
Okay, I'll run it.
All right.
So this is actually last week. Last week we had a good week. We saw kind of the IPOs going into this week. Wait a minute. Sorry, guys. I got somebody bugging me on Skype. My bad. The week before this, going back to Akan, going back to Nightscope, going back to a few of the IPOs before this, just weren't getting much attention off the debut. We were seeing them drop. We were seeing them kind of trade pretty thinly on day one. And MTech was another one. A few of these have just had very low volume on day one, and they just kind of dropped off on the debut. And then they went on massive runs on day two. So that setup started being pretty predictable. And whenever you see a setup start getting predictable, you can expect it to kind of evaporate or get played out. What happens basically is everybody starts saying, oh, they all run on day two, I'm going to buy in on day one. The drop off becomes less pronounced, and everybody's already in it. So the day two rally doesn't really materialize the way that we might have seen in some of the less forecasted ones before the pattern emerged. And I kind of expected that with Rail Vision. RVSN had a very low float. And what I wrote on Monday, I sent out the newsletter usually I get it out on Tuesday after we cover the stock on Monday on the show. What we said is we saw a fallout from the debut, start buying a dip to bounce play. We kept a pretty tight trailing stop loss in case it reversed down, but ready to kind of build a position throughout day one. If we saw it drop off and just trade thinly on day one, then the play would be to sell on day two. But if this drops to about 240 or below, that would be the ideal time to start taking a position. So I always try to have a game plan when I go into these. And the reason is if the game plan doesn't play out, I know where I want to try to kind of take profits if I can. So this one didn't drop that hard. It opened at 315 and dropped to about 260, 265 off the initial drop, which wasn't huge. And, you could take a little, this was that original kind of reversal that I was looking for. It got back up to about 280, but again, we didn't see a big rip. We didn't see any halts. It just kind of fell off from there. And this 240, 250, this was the area I started accumulating a position right here. And the reason for that was that it didn't look exactly like the rest. And I did feel like if we didn't get a day two run, which is what I was really looking for, I was saving some buying power if we got kind of a fall off from this. I think I added a little bit right here. I was expecting it if it had to follow the script of the other kind of low float IPOs that we've seen and to sort of fall off right here and then drop, but it didn't. That's okay. I was in down at about I think my position was at 240 by the time it started running here. I took a little bit out on a halt when I didn't get a halt. I took a little bit out here in one account, and the rest I said, okay, let's see if this falls out or if it, runs up. When it ran up to the close, the float on this was, I think, about 2 million shares. And I think we had seen about 5 million shares trade in day one, which means that it wasn't very thin volume. And therefore, it wasn't the setup. It wasn't the setup that we'd seen. In other words, my hypothesis had not played out. Yeah, volume 4.9 million. So a much larger volume than the low floaters that had kind of failed on day one and run on day two. So what I said was, okay, I'm up right now. This isn't what I thought it would be. This wasn't the look I wanted. I'm just going to take profits here. And right after the the market closed, I set a limit order, and just got out here. Figured, maybe it gets a day two pop. It did get a very muted 4 a.m. Not much of a run, and it just kind of fell out. So the stock didn't really have any pertinent kind of buzzwords in it. It's like automation or image processing for railroads. So it didn't really have anything that made me say, oh, people are going to get excited about this. It's pre-revenue. It's got a long way to go. It's not something I would invest in on the IPO. Most of these stocks aren't really something you want to invest in. It's very speculative anyway. And we just didn't get any real action. We got a little bit of a return. Maybe some bag holders got off the hook here. But now I'll put this one in kind of the LPX bin. And the LPX is the lockup period expiration. Fit Trader Girl, Allie, she may be watching this. She's somebody who's really developed a pretty amazing strategy around trading the lockup period. And what she's doing is she understands there were warrants involved in these. Those warrants have a strike price. I believe that they're around, between $4 and $5. So she'll watch this for weeks, and it'll drop. We expect this to drop and drop and drop. Eventually, it'll be trading at about maybe $1.20 or $1.40. And then when the lockup period expires on those warrants, we expect the company to run drop a headline. It could be a contract. It could be an endorsement from one of their suppliers. I mean, when you have a pre-revenue company that's working with industry players, it doesn't take a whole lot to a catalyst to run this. So the only thing I don't really like about this is this one started as a 2 million share float, and then it looks like either the lockup period already expired. A lot of times the S1, or in this case, I think it's the F1 because it was an Israeli company. I mean, when you see the float balloon from 2 million to 18 million and the price drop, it kind of becomes something that's not really the stock that I'm looking to trade. So for me, I'll just put this on the watch list. I probably won't touch it for a long time. If we do get towards, do dig in back into the F1 and see a lockup period later on, maybe. It won't take much of a headline, but more than usual, given the float here to run this. Also want to keep an eye on the volume. It's very likely that insiders have these shares and just are not trading them, but kind of move on to the next trade. If you don't love it, stay away from it. Find something you love. This was the call out on XPON 360. So XPON was kind of set up, in my opinion, to be the IPO debut that broke us out of the kind of debut slump pattern that we've been seeing. And I said this one might be the one to break us out of the week debut slump. If the market remains strong through the week, which it did, the day traders looking for something fresh to play. This is a green energy battery for vehicles company, and had a very low float. I think the float on this one was 2.14 million shares. Ideal setup to take a position off an opening drop, if not buy the debut outright. So I just went ahead and bought the debut right away. Debuted at 790. Gave you a little bit of a dip here, so setting up a ladder trade might have been a better play. I was out running errands all day and got back about 5 minutes before this one debuted. Did manage to get the live stream up. I'm live streaming these on YouTube. If you go to YouTube and search for IPO Warriors, there's a channel there, kind of just calling out the pre-debut indication, sharing my ideas. Sometimes I have other people on. Ali Trader Fickle's been online. She's great. And play this dip, hold through. No reason to sell at the beginning. This is 10 minutes here. And then it just started ripping up. We got a halt here, take part of your position out here, let it play out here. I generally look for 2 legs up. So if we get this first leg up and it's really strong movement, you can kind of hold that. I was playing very conservatively, so I put in a stop loss and got taken out, I think, at 895. When it moved up, it did a little bouncing here. I think I got triggered there. But in a more risk or less risk averse mindset, I might have, or I would have, as I suggested to others, stay in this for the second leg up. 1 leg up, 2 legs up. That's the time to take profits. Take half out here and let some ride. Definitely took some out of the first halt on my super conservative account. So then we see this drop out for most of the day, and we did not get any kind of end of day rally. A little bit surprising, and especially that we didn't get much on day 2. I did get back in this. We can see where it's at right now. We have in the past kind of recently, we have seen day 2 rallies materialize. This one has not. So I'm thinking that either the underwriter has exercised their over allotment, which is kind of keeping this from rallying here, or that this was the second rally and that's all we got. I do believe this might have some more legs to it, and ultimately it's in the right industry right now. I mean, lithium ion, rechargeable batteries, all this kind of stuff ties into the EV theme. We got 1 pop. It's still, the float's still super low. Volume's approaching the float. So does this get an end of day rally? We shall see. Does it get a day 3 pop? Very possible.
And so last week we saw a lot of retail interest in XPON. Is there a way to try to kind of maybe before IPOs, just tracking social mentions or something of that, trying to see which of these IPOs maybe will get the interest of retail investors more so than others?
Well, I tend to check out Twitter, check out, this was available for allocation request on Webull. So I'll go and ask for 100 shares or whatever and see if I get a full allocation. It's not necessarily a great sign. On this one, I got about a 20% allocation, which tells me that a bunch of people were interested and they were able to kind of divvy them out rather than just dump them on everybody. So that's certainly part of it. And then the pre-debut indication, which we can see on various apps, including the Webull desktop app and the mobile app, will show you what price they're trying to balance the share price at before the IPO debuts. And without that, it's very hard to trade these, in my opinion, almost impossible. With that, we are able to see that, okay, the IPO priced at 7 there, and they get to see it in real time. This one, I think, started at 11 o'clock Eastern and went live at 11:10. It's usually, at least on these low floats, they have to give it 10 minutes for them to pair the sellers with the buyers before they take it live. And this one, they basically took 11 minutes. So usually what they're doing on these low floaters is going live pretty much right as soon as they can. But while they're doing that, you're able to see how many shares are being paired, how many shares are in the imbalance. In other words, how many shares are unaccounted for. And they tell you is there's a buy side imbalance or a sell side imbalance. So if I see a sell side imbalance and the debut price is showing at or below the IPO price, then I can pretty much understand that it's going to drop off the debut. If I see a buy side imbalance that starts at say $7 and then they keep inching it up, 720, 740, 750, to 790 before we see a sell side imbalance, and then they pull it down a little bit. I think this one got to 15 or something, and then they pulled it down a little bit. That shows me that there's pretty good demand for it, and that's going to give me more confidence to buy straight off the debut. Different underwriters, I mean, I guess it's really the bookmaker that decides this, and understanding what the process is certainly helped me recognize that, what the dynamics are behind this. But it's literally someone on the phone with the NASDAQ, someone who's part of the underwriter, book writer team, on the phone with the NASDAQ, and the NASDAQ's saying, okay, we're getting this much at this many shares at this price right now. Do you want to go live? And they're going, no, hold on. And then they go, okay, we're getting this much. And it's like just being, and then it's like they're almost live trading their own stock with the NASDAQ before it goes live. And then they get, okay, we have 790 at 100 and what was it? At 262,000 shares. Do you want to go live? And they go, yeah, do it. And then click, it goes live, and that's when we can start trading it. So those are, Twitter, you can't trust too much, but it will give you an idea. People were talking about this. There's a lot of these low float IPOs. Nobody's talking about them. If it's a low float IPO and everyone's like, this one's going to the moon, blah, 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 that's pretty good, indication that there's already some retail interest. Then if we see an allocation that's not 100% full, then you know that a lot of other people who had the opportunity to submit allocation requests, put in their allocation requests, and you're not getting as many as you asked for. With, the third thing I look for is that pre-debut indication. That's usually the, some are so obvious that I think SEV, that was one that was just so obviously going to rip, because Rivian had just done their IPO the week before. SEV was this solar EV technology with a pretty low float, and it's not an investment. These are just kind of hype plays. At that time the market was still pretty decent. So some of it's intuition. Is this a buzzword? Is this something that people are going to create a story around? Is there a low float? Is the price not obscene? If they had debuted this at $12, maybe you say, that's just, there's too much downside. But to debut this at $7.90 on something with a low float in a buzzworthy industry, with a lot of social media hype, with a strong indication, with a partial allocation fill, those are the kind of indicators that I'm looking for. That's going to tell me, yeah, go ahead and buy this on the debut. You're going to get upside movement here, and we got it. So that is that's last week's trade. So what do we have coming up for this week? We've got, let me get back to the slides. All right. So this week we got Lightest Technologies, LYT. And, the question is, I'm sorry to do this, but I'm crediting somebody else for this. Alec came with this. Will this be lit? Well, it is lit. And we've got 3.25 million units being offered at $475 to $675. So what is this company? This company is a content streaming and telehealth company. Apparently the telehealth section of this company is not yet operational, and they want to get into Internet of Things, which also is not quite operational. They have about 8 million active users in India, which is a tiny portion of the population. But they also provide services, or are planning to provide services in the USA through their Global Health Services Inc. company. And they are actively acquiring companies in the telehealth segment, looking to kind of seal the deal on a bunch of these acquisitions through the funding from their IPO. So their financials are ridiculously impressive because in 2019, it looks like they had barely gotten started. And then in 2020, they are kind of comping their financials against that. So I'm not even going to go into what those were. They're like 10,000%, but it's basically like saying, it doesn't necessarily mean that 2000. I don't think you can forward project those onto 2021 numbers. But they do have. This is not a company that doesn't make any money. Which, for example, RBSN doesn't make any money yet. This is a profitable company in terms of operating profit and net income. They do have negative cash flow. These are kind of interesting plays. but we haven't seen an Indian IPO. I mean, India has their own stock exchange. The IPOs have not done particularly well recently, from the kind of newsletter and newsfeed headlines I've been reading. But they have upsized this offering, which indicates that in their preliminary kind of feelers and market testing, they believe that they're going to be able to raise more money than they thought about a month ago, which is impressive because the market's been pretty, pretty bad. But I don't know if this is going to get a lot of hype off the buzz unless people just go, oh, IPOs are hot again, buy the day one pop. Otherwise, especially when you have units involved, when you have warrants, this will be a share and a warrant. So you're already going to see that warrant price discounted off the share price. So I'll probably watch this and make a game time decision. It's again, comes down to that indication. If they price this at 675, I don't really like it that much. If they price it at 475, go live at 4, maybe get in at like 355, 365, you have to expect an initial dip. A lot of people will buy the unit and just sell the share right off the bat and keep the warrant. So whenever we have warrants, it's pretty rare that we see an initial run up that doesn't first pull back initially. So I'm not super excited about this. I will be watching it. I'm not sure if I'll live stream it. I got a lot going on this week, but it should be tomorrow. So there might be others that get added to the schedule throughout the week. We've got a few that have been floating around, kind of flirting with going live. WLDS, wireless devices, GNS, which is Genius Group, which is a Bosted securities underwriter play. Those are always interesting. So I think we might see the calendar have a few plays added to it later in the week. I'm going to hold off on sending out the newsletter. Maybe I'll just send it out for LYT tonight and do a midweek update. But if you sign up for the newsletter, IPOwarriors.com, it's free. You get the kind of breakdowns and my trading strategies outlined in the, not financial advice, of course, just ideas. But we've done pretty well. So that's what we got this week. That's what we had last week.
What matters.
And that's all that matters. Yeah. So that's what I got. That's all I got, Aaron.
Beautiful. Well, Matt, we always appreciate you coming on the show. Of course, we wish you, nothing but health and safety and good luck in your travels over there. Let us know always if you need anything, and we'll be thinking about you.
Cool. All right. Thanks, Aaron.
Problem. All right, guys, that was Matt Hammond from IPO Warriors. Go ahead and visit the link in the description. Check out Matt's site. Sign up for Matt's newsletter. Let's see. I'm trying to catch up with the chat here, seeing what we've got going on. Guys, I've been trying to follow just some like bigger movers in the market right now. Let me pull up my screen. Guys, look at Netflix. This is what I was talking about all last week. Just waiting for that breakout on Netflix. Now we're finally getting that 5% pop. Great day for Netflix. As you can see here in Benzinga Pro, we've got the whim. Why is it moving? Shares of several companies in the broader technology sector are trading higher as stocks rise despite uncertainty over the Fed, inflation, and the Russia-Ukraine conflict. Yeah, I mean, the NASDAQ has been strong all day. Of course, led by Twitter, up at last check, 25%. Make it 28%. Wow, let's go to a 5-minute chart. We'll be able to see some of this intraday action. Twitter just not slowing down after the news came out that Elon Musk has bought a 9% stake in Twitter. What we can only assume he will be then trying to influence what he wants to see happen in the company. I had mentioned we would do a quick history lesson on activist investing. We'll probably do that after our next guest, Jake Wujastyk, because we're going to be running through some charts with Jake at 1 o'clock, 1 to 1:30, and then after that we may have a few minutes to get into the history lesson of activist investors. But yeah, guys, just all around tech just strong as hell today, right? Let's go back to ARKK. Whoa, that was weird. I typed ARKK, but my Tesla popped up instead. ARKK up 4%. We're looking at the 5-minute chart here, so it does look like up here we could be running into some resistance, at least just on the intraday chart. I'm never too worried about kind of bearish movements on the 5-minute chart just because things move so quickly. But I don't know if you guys are quick day traders out there. Maybe you guys see something that I also see, that maybe this is could be setting up for a quick little short down here before you get a nice little bounce again. But I mean, look at this volume dwindling too here right at the open. 620,000 shares traded in that 5-minute candle. And then you go all the way down here. We're only looking at 100,000. So that's typical. I mean, afternoon, there's less trading. We'll see if we get some more volume upticks as the day goes on, if we'll get a little. Yeah. So Christian Gallagher brings up a good point. 10%. So a lot of times you'll see investors opt to kind of buy a stake that's just below 10%, right? Like I think Warren Buffett, I forget what company it is. I think Warren Buffett has like 9% of, maybe it's Apple. No, he could. Does he? No, there's no way Warren Buffett has 9% of Apple. I don't know, but there's a lot of times you'll see that out there, and like you think it's like, oh, that's weird. Like all these guys are buying 9% of X company. No, it's on purpose. It's because if you're above 10%, you put yourself in a position where you have more regulations you have to abide by. So a lot of times people do not want to be above that 10% threshold. Shelly, thank you. We have also issued an Amber Alert. We have let all relevant authorities know that Spencer is missing, but they're like, is he your kid? And I'm like, well, no, not technically. And they said if he's an adult, which I said he technically is, then there was nothing they could do in terms of like filing a missing report claim or anything like that, and that we would have to wait a couple more weeks. But hopefully Spencer makes it back from Vegas in one piece. I don't know. I've seen that movie, The Hangover, where the guy got yeah, exactly. Easy Mike and I were going. Yeah, he's on a roof. He's on a roof all sunburned right now. His friends are looking for him. Actually, I don't know. In Hangover, who would Spencer be? Would Spencer be the dude that gets punched by Mike Tyson? He'd be Ed Helms. That's what Aaron Thomas is saying. Easy. So that means to fulfill his legacy, he has to get punched by Mike Tyson in real life. Yeah, we'll see. We'll see how Spencer's doing tomorrow, hopefully. I assume maybe a little bit of sun. I don't know if Spencer can tan. I don't know. Spencer seems like Alan. Actually, I have a funny story. This has nothing to do. None of this has anything to do market related. I waited tables in college, and one time this woman, part of like, you know, her and her husband were out to eat. She was like, "Do you know who your voice twin is?" And I was like, "What are you talking about, voice twin? Like that's not a thing." But like, all right, tell me. She was like, "Doug from The Hangover." And I was like, okay, that's like a cool movie. I was like, but I can't think of who Doug is. So I'm like Googling on my phone in like the kitchen in the back, like, who's Doug from The Hangover? And it's the guy that gets stuck on the roof. And I'm like, hold on, this guy has like 3 lines in the whole movie. He's like, hey guys, I'm up on the roof. Like, how it, what? Aaron Thomas is saying I am too. I see, to me, I don't have a memory. Like I remember a lot of weird things, like numbers, like things I read, but I can't think of what he sounds like. Oh, should I play it? All right, that's a good idea. All right, Aaron Thomas is saying I should just play it. What should I use? A hangover roof scene. I don't think I sound like this guy. All right, you guys are gonna have to let me know if we get audio from this, because I don't know if we will. Yeah. An eidetic memory. I have a weird memory, but it's definitely not eidetic. Well, I gotta mute somewhere. Here we go. Like I remember my. Oh my god. All right, you guys are getting the. How do I mute tab? Tab mutes. All right, there we go. Sorry, guys. I just couldn't. If I was talking, it was coming on my laptop too. Here, now we've got audio. Like I remember my like childhood's best friend's like house phone number from when I was like 8. I'm just gonna skip to where Doug's talking. All right, Bradley. He like doesn't talk at all. Oh, here we go. No. All right, that's probably as much of voice we're gonna get out of him. All right, we'll find a better scene and we'll be able to compare and contrast our voices. But I just thought it was really weird because I was like, why? Like, how does this woman remember what? Oh wow, I literally did not even know it's snowing. It is snowing right now behind me. It's April, and it's snowing. So, man, that sucks. I want to play some golf. Zach Brown. I mean, shit. Thanks. I mean, I don't believe so. That's a good looking man. But you make some good music, Zach Brown. I was actually listening to some Zach Brown band over the weekend. Colder Weather, great song. Colder Weather is a great song. And I'm not a big country music person, but some Zach Brown band when the time's right. Maybe, you know, a cold beverage in my hand, some Zach Brown band weekend, can't beat it. All right, let me pull my Benzinga Pro back up. We're going to do some ticker time. We've got about 5 minutes till Jake Wujastyk from TrendSpider joins us. So, actually, how about instead of pulling up my Benzinga Pro, I'm going to pull up my Robinhood right now. And I want some advice from the chat. Should I... okay, actually, I already know the answer. I was going to ask you guys for advice, but I already know the answer, and it's to trim my position. So I bought these TQQ calls. Yes, so we had a rally last Friday, right? I believe I bought them before the Friday rally, and I just like YOLO. Like they were really cheap. They were 57 cents a contract. I bought 5 of them. I guess we can see when I bought them, right? Let's go to history. Buy. I bought them, yeah, $3.25. So right before the Friday rally, I bought these, and they were 57 cents at the time. Now they're worth more than almost triple that. Yeah, about 185%. But I really like. I'm still bullish. Like even from here, from where we're at on the Qs, and we'll pull up TQQ's chart. Like I think this week, right, and it's easy to look at this and say, oh my God, we've come up too much. We're so overextended. But if you look out here, it doesn't look, it's like, to me, I guess you could say we could hit some resistance up here at like 63, 64 and come back down potentially. But I would see it more likely that we break through these previous resistance levels and at least get back up to here before we get any sort of major sell-off. But I think the smart thing to do is I should trim some, right? So if I bought 5 at, we'll just call it 0.6 to make it easier, 300. We'll say I got in at 300. I'm just going to sell enough to make, see right there, I can sell 2 contracts for $320. Well, wait, I don't have enough. Oh, it's because I had a stop order out. Let's go ahead and cancel this stop order. Cancel order. Now, I'm going to go back here, sell 2 contracts for 1.6. Oh, I still don't have enough shares. You got to give it one more refresh. This is Vlad playing his old tricks on me. Vlad and I used to play pranks on each other back in college. All right, so now if I get filled here, again, I bought 5 contracts at 0.57, so my cost basis a little less than 300, but I'm just gonna I'm taking off my cost basis so I can let the rest ride on house money, but I'm not getting filled there. So let's oh nope, I just did. So I got filled at 320. Now I locked in some profits, albeit not very much, and I'm going to let the other 3 contracts ride. You're going to have a good week, or it is what it is. Mr. Hamilton, do you want to sit down?
I was looking for
a phone. Oh, yeah. You can take this, or you can leave your phone here with me.
Wait, did you end up profiting on the trade that you made?
Which one?
The one that you showed me today.
That was that one.
109. Did it go down on you?
No.
You booked 100 and plus percent
on? It's up from there. See, it's up 184% total right now.
Let's go.
Yeah, 184%. Nothing to sneeze at. You know, if you do 184% every day, be in good shape. No, but for real, like I said, that was a YOLO cheap option play that ended up working out because it's a leveraged product that could have easily, I mean, even if the markets were just like relatively flat today, basically because the Qs just are ripping today, and they ripped at the end of the close on Friday, that ended up working out for me. Otherwise, very stupid, very not smart investment. But hey, sometimes it is better to be lucky than good. I wouldn't use the TQQ. Yeah, that's a good point. You can't really take you can't really take support and resistance on the levered. Which one's correct, y'all? Leveraged or levered? Well, you can't really use the charts on the. Oh, that's Jake. Jake would know on the leveraged products because, or the leveraged funds, because the charts just like are wonky. Like over time, they all like here. I'll give you an example. Well, actually, I can't really do it on Robinhood because those charts only go back 5 years. Let me go share my Benzinga Pro. Let's pull up. I don't know. I'm just pulling up like the first leverage fund that comes to mind. Gush, and we'll go out to weekly charts. See how like wonky that chart is over time. I mean, let's even try it with TQQQQ. See, like, I don't really know what's going on down here. Like, they always split and do crazy things. So yeah, you leveraged. Yeah, that's it. Leveraged. The leveraged funds. How's my Baba? That's a good question. Oh man, Alibaba. Yeah, we haven't talked about the Chinese stocks today, but there is news why all Chinese stocks are moving higher today. We'll talk about that once we get through some charts with Jake Wujastyk from TrendSpider. So let's go ahead, give Jake our special intro, bring Jake on, and we'll take some tickers from the chat. Jake will have a few that he's been watching, and maybe after we get through those, we'll take a few from the chat and just see what's happening in the technical analysis world. So without further ado, producers, let's cue up that special guest intro. Yo, yo.
Howdy do.
What? How are you doing?
I think I got the screen to finally work this time without doing that on air. Can you see my screen?
I can. Oh, hell yeah. I kind of forgot about that, to be honest.
Things are good. Just got back from Scottsdale last night, and then I'm heading straight to the Bitcoin conference tomorrow. So.
Oh, hell yeah. We'll have a few people down there. You'll have to meet up with Andrew and some other guys we have down there from Benzinga for a drink or something.
Yeah, definitely. So it's been a little. I haven't been watching the market too much, so we'll kind of be looking at some of these names together, just kind of getting back into the groove today. But yeah, definitely.
Do you golf?
Yep.
Was that what you were doing in Scottsdale?
Yeah, I was there for a bachelor party, but we golfed 2 days, so it was essentially a golf trip. And
oh hell yeah! As you can see behind me, it's fucking snowing up here, but I'm trying to. I'm going on a couple golf trips like in the next coming 2-3 months or so. So I got to get back into the swing of things, pun intended.
Nice. Yeah. It was good. I didn't realize Scottsdale is like such a golf place. Like I got off the plane and
yeah, there's like golf stores.
30 bags were golf bags. And I'm like, oh, okay. I missed the memo there, but Yeah, it was fun, and definitely nice to see the market a little green and just kind of a little. I don't want to say flat, but some names moving, some names aren't. So you have some direction in some names, but it seems like your IWMs, at least IWM in general, is not moving as much as maybe some of the other names are.
Yeah, well, it's interesting. You look at like the Qs, and the Qs are up like 1.5%, but then you look at like what's driving it. It's like, oh, Twitter's up 25% on the Elon Musk news. Oh, Netflix is up 5%, and it's like it's the big names. It's the big names moving, and then if you really like, to me, I can't. I mean, I'm trying to think because I know we have, of course, in the past 2-3 weeks have had some like crazy good days, especially in growth and tech. But even on those days, they were more like overall good market days, and you'd see a lot of the traditional stocks up too. At one point, I checked and like the Dow was down today or like flat, while the Nasdaq's up like 1.5%. And I had to think back like a while till we saw a day that tech was outperforming by that much more value.
Yeah, no, it's definitely kind of been an interesting market for a while now. So it has been nice to see the market finally catching a little bit of a bid here over the last couple weeks, and really the last couple days were, it maybe seemed a little scary, but it was really just kind of gap fills from the March 29th gap up. So we kind of filled that gap on Thursday and then continued down Friday, and now we're kind of back to exactly where we were on Wednesday. So I would assume that Twitter definitely has some influence on the direction of tech, but at the same time, Twitter's not a huge name, so it's not like Twitter's actually moving the Qs.
No, but it's funny because if everything else is like relatively flat pre-market, and then Twitter goes up 25%, and like you said, it's not a big holding, but then say that makes the Qs up like 0.1%, and then you see the green, and it kind of it's almost like one of those like chicken or egg,
Yep, no, for sure. And like we were talking about, you've got IWM here, kind of just like actually red on the day. But if you are just looking at straight up price action, you do have these higher lows here that are forming today, higher highs, higher lows from Friday, and it's really interesting that. Same thing. It was just a simple gap fill on Thursday and Friday, and then we just are kind of stuck for now. But all in all, the main thing that I'm kind of focusing on here for IWM is just simply the fact that the price action is still above the January high VWAP zone. So I think I've gone over this the last couple weeks, but it is kind of fun to sometimes see how it's evolved. So as we talked about before, you've got this previous VWAP with kind of a zone added to it, capturing, look at how many times we were rejected here. And then finally, over the last couple weeks in mid-March and from there on out, we have held this area now as support. So a pretty typical SR flip here on IWM, meaning previous resistance became support, or you can have previous support become resistance. SR flip, it doesn't reverse. It's not like an RS flip or SR flip. It's just kind of a generic name for either one of those two things that happen. But for now, it's just kind of holding where exactly we were the last 2 days of last week. So I thought it was interesting. Bitcoin had a big move last night, and then we're kind of back to exactly where we started today, even a little lower. But I think the main thing to point out here, and this is something that we went over too, is you just have so much supply up here. And you can see how many times the price has just really had trouble or just straight up rejected at this area. So remember, break-even supply, just this volume that is now essentially back to break-even after dealing with a little bit of a drawdown. And you can see last night, right? I think everybody thought, this could be the start of a new run. And then just a hard rejection here going into last night into today. So for now, you almost have the exact same thing that we just talked about on IWM. So I'll get rid of I'll get rid of these bands here, because at the end of the day, this VWAP right here is almost doing exactly what the IWM VWAP did. So You anchor it from the high here in November. That means you're starting to measure the volume weighted average price from this big reversal here in November. And you'll see here that it's acted as resistance, not perfectly, but if you added a couple percent offset onto this, which I just had, you'll see that this acted as a really strong level of resistance. And then finally, we broke above it in the last few days of March. And then now we're actually above this area with it acting as support. So another kind of SR flip here where you did kind of flip over to previous resistance acting as potential support now. But as I mentioned, you got a lot of supply here that the market needs to get above, and it has not yet. And on top of that, you do have an area, kind of this void here of volume. You don't have a lot of volume here, which you can see the price drop very quickly. You saw that back on the 31st. You had that big wick move down, and then literally we closed green. So within these volume gaps, these voids, you can have some pretty crazy volatility on both sides of the equation.
Yeah, and I mean, I was very surprised, and I was talking about this earlier on the show, that today, or at least with this, like, I don't know what you want to call it, just kind of like move down from that move up over the last 24 hours or so. Like if you look at Bitcoin over the last 24 hours, it's actually down 1% or so. But Coinbase is up today. And to me, I see that as like a very bullish sign for the stock, because most of the times Coinbase just trades with Bitcoin. But the fact that Coinbase is having a green day while Bitcoin, I mean, Bitcoin's not like, dumping or anything by any means, but just isn't really having a great day. I think, like, I don't know, like maybe I'm reading too much into that, because it's not like Coinbase is taking off today. It's only up 2%, but the fact that it's holding up may mean there's like something fundamentally there. I don't know.
Well, it seems like all those growth names are kind of doing pretty well today.
Very true. Yeah, ARKK is up like 4.5%.
Kathy Woodstocks, if you want to call them that. But yeah, it seems like a lot of these names are really starting to put in a base. So Coinbase is definitely one of her favorites. I'm pretty sure she's still in that. Sometimes hard to tell because she will move around in different positions so quickly. But Coinbase, I mean, Roku, if you just look at ARK in general, you get the same thing. You've got a pretty classic inverse kind of head and shoulders here. A rough estimate of that, with your left shoulder being a little lower than your right shoulder. But you have a lot of these types of charts here that are forming these bases. And then if you go to the moving averages, you are starting to see the moving averages start to curl up a little bit. So the 20-day, the 50-day, the 200 still declining. But for now, you are starting to see that shorter term kind of curl here on those moving averages. So, this could be a bigger reversal kind of over time than, just a couple green days. I think and just looking at trend, what you want to see is you want to see higher highs and higher lows. So if you see this higher high, if you see this high taken out from March 29th and we get a higher high here, then that's definitely a bull case. And especially if we do put in a higher low in that same kind of move, that could be the chart finally starting to kind of turn. I mean, we only went straight down for about 3 months or more, and we're finally kind of forming that base. And I mentioned the inverse head and shoulders. It's a pretty, it's definitely not textbook, but if you look at a textbook on chart patterns and then you look at actual chart patterns forming in the market, they're not going to be exact. But this is kind of what I'm seeing. You've got kind of this left shoulder, this head, and this right shoulder here that we're trying to break out of. And then the main thing you'd want to see is really just a break and close above this, like, let's call it 7150. And then on top of that, you do have a lot of supply here, kind of like we just saw in Bitcoin. So if we can get above that area, that's a pretty solid setup as far as kind of what we want to look for. And then on top of that, you just don't have a lot of volume up here at all. So a lot of things kind of starting to maybe align here. Maybe the market, already priced in its 10 rate hikes, because a lot of people are saying, well, they're going to raise rates X amount more times again this year. And, the market is a discounting vehicle, right? It discounts all this information at that point. So if you've got the market kind of discounting in these rate hikes, even if they do happen, you may not see the move down continue to move down in price if it was already priced in months ago. So we'll see. I think, the main level, let's just call it 72. Ideally I'd like above 72, but 71.50 would be kind of the highs here from the previous March 1st and then the March 29th highs.
Yeah, I'm kicking myself, and I know I get in a bad habit of doing like, oh, woulda, shoulda, coulda. Like I was watching Netflix I actually did make some good money on Netflix. I think it was 2 weeks ago, like looking for a breakout. But I've been watching Netflix on my kind of like breakout watch list for a while, and I don't have any active trades on it. And now it's up like 6%, $25 today. I'm like, shit. So but same thing with ARK. I was watching ARK last week. Like this has got to we got to get another bounce here at some point. But again, I try to stay away from that mentality of like, oh, I should have done that, because it's like, well, yeah, hindsight's always 20/20.
Yep. No, it's just one of those things. You got to accept it and try to move on to learning from it on the next trade. But I'm assuming Netflix is probably up from Roku, because Roku's up what? 6%. So Roku, I think, had news with Amazon, or they extended their contract or something. So yeah, Netflix does look really good. I mean, we had that little pop last week, and then we pulled right back to where we started, and we're right back up. So you do have a lot of chop in these names. A lot of these names are not trending yet. They're just trying to put in a base. Technically you've got these higher lows, but if you would have been swing trading options over the last 2 weeks, with not a lot of time, that's a lot of just kind of chop, and that will just destroy options premium. So you do have these spikes, but those are definitely spikes that would be ideal to sell on. But if you do break above, kind of the same thing, all these charts look very similar. If you break above these previous highs here, let's call it 396.50, 397. If we can close above, let's just get an exact, I'd just call it 396.50. If we can close above that, that we may be starting to get somewhere. But there's now 2 highs here. This is actually a little higher. So what you can always do is you can take this high from February 28th, and then make another line here from the high on the 29th. So you're making more of a zone, more than anything. And so that zone is right around 396.50 to 397.50 or so. So yeah, this one, I think you'll probably get some breakout participants coming in here if we do get above these 2 previous highs. And then from there, you do have a huge gap above. So, this is a pretty obvious gap, but one of my favorite things to do is just, put in the gap snake on the indicator list and add it to the chart. And you'll see that this gap has filled a little bit, but you still have a gap above from around 458 all the way up to around 507 or so. So you do have this gap above. If we do start continuing to move up higher, the gap above is definitely maybe a target for bulls to the upside.
Got it. I'm just checking up with the chat, seeing if we've got any tickers coming in that we want to go over while we got you here. Jake, also, do you have any, are you a college basketball guy? You got any predictions for tonight?
I do watch, March Madness. I'm not too big into college basketball during not March Madness. So I couldn't tell you Kansas is really good in this part of the game. So, I mean, I'm from North Carolina. I'm from Raleigh. So UNC is generally not a team that I root for. I'm usually going for Duke. So obviously with Duke getting beaten by UNC is definitely who I'm hoping to win. And then we'll see how that plays out. But that was definitely a good game on Saturday.
Yeah, I didn't know that you're from North Carolina. That must have been a fun. I saw something on Twitter. Someone asked someone that went to NC State. They were like, "Who are you rooting for in the Duke UNC game?" And he texted back and said, "For the building to collapse."
Oh man, yeah. You definitely have a pretty big rivalry between all 3 of those schools. So,
but you're Duke. You're Duke over the other 2.
Yeah. So my last name being Wujastyk, Krzyzewski was always kind of someone that I liked, just being Polish, and then he he is so funny. He looks almost identical to how my grandpa looked before he passed. So just like that. And then I worked. I helped a startup out of Duke University that was spun out of the biomedical engineering college right when I got out of school. So that's
hell yeah.
That's also something
Yeah, Coach K to me, he just looks like the most like stereotypical old Polish man you've ever seen in your life, or like old like European, like he probably looks like one of my like I think I got some Polish in me too. He probably looks like my Polish grandpa too.
Yeah. So it sucked to see the game end like that, but I'm definitely excited to watch it and see what happens. But I'm not too big on like sports betting or anything, so I won't be like betting on it or anything.
Well, I was just gonna ask, maybe a nice segue would be for us to look at Penn and DraftKings and whatnot, because
honestly, I thought they would be doing a lot better in the March Madness.
Well, I think it's all. Well, here's my thing: is I think it was always priced in that, right, a lot of people are going to be betting on this. The question is, like, when do we get those metrics in terms of if to me, I think there are already some, because I remember like during the Super Bowl, like even before the game started, there was, tweets out about, oh, there's been X amount of millions of dollars bet on the Super Bowl, the most of all time. I assume some of that information's out there, but it'll take even longer for the companies to come out and say, here's how much total, betting we did during March Madness or whatever.
Yeah, I mean, at least in Colorado, there are a lot of betting apps. I think there's like 26 or 27. So
yeah, here too in Michigan, there's a lot.
Even if there's a lot of betting going on, that's a lot of betting apps that are kind of participating in that whole thing. So, I definitely think that this was. I don't think there was anything special about Penn or DraftKings. I think it just rode the whole growth wave when we had all that, money going into the market, that liquidity, but. I mean, this is something I just kind of eyeballed when we were talking there. You do have kind of this symmetrical triangle forming here. So we are getting kind of close to the apex of this symmetrical triangle. So this would definitely be an area I'm watching, let's say from around 46. But it's always hard if you're using like horizontal levels. And I talk about this a lot. It's a function of time. So like if we went straight up today, then your resistance is going to be, let's say, around 46. If this thing just does nothing for the next week or two, then your resistance would be like 43, 44. However, you do have a horizontal resistance, pretty just generic horizontal resistance here that you'd really want to get through first. So that's from around 45 up to around 45.50. So I think if you can close above 45.50, that would definitely be a status quo changer, if you will. We haven't had that close above that level in a while. So I would definitely say, like, if we can close above this horizontal level and above this symmetrical triangle resistance, then it actually could be a pretty strong move if this breakout occurs.
And we are up about 7% today on Penn. So I'd be watching it for a breakout sometime this week.
Yeah, I mean, same thing with this though. I mean, from almost early March, you have gone nowhere. So this is definitely one of those, like, 1 to 2 day swings, if anything, because if you're holding options for the last 20, 25 days, trying to catch, a trend forming, this thing is just probably just destroyed some of these premiums just trading within this range. So, upside, I think 45, 50, 46, and then downside, if we really broke, let's say 39.25, this general area, which is right in line with that symmetrical triangle support. So, this would kind of be your trigger zone, right? Trigger for lower lows here, right around 39.25 to 39.50, and then 45 to 45.50. If we can close above 45.50, and ideally this symmetrical triangle resistance, that's when things, we may get a little boost here.
Yeah, I mean, I think, I don't know. I don't know what to think about these like companies long term. I think they're great stocks to trade, like Penn and DraftKings. I just, like you said, there are like so many of the different apps. That's been the biggest thing dragging these stocks down, is everyone's talking about how much money DraftKings and FanDuel and MGM and Caesars are spending on promotions and advertising to try to capture customers. And then I don't know. There's also the argument that people are like, oh, they bring in most of their money from like 5% of their customers that have like,
Probably.
I don't know. Yeah, yeah, which is like bad because it's like, oh, those 5% have like probably like pretty severe like gambling problems or whatever. And then they're like, what happens when those people run out of money and stuff? And it's like, I don't love that argument because it's like, do the casinos, does Vegas run out of people to make money off of? No, there's always going to be, you know, someone out there willing to make a bet, but
Sure.
who knows? Maybe we don't know that those, you know, people with the severe gambling problems will lose their money a lot quicker on the phone versus who knows? So I just don't know long term like what this looks like as far as like an industry. But I do know that these stocks, whether you're talking Penn, whether you're talking DraftKings, like they move, and I like that.
Yeah, and DraftKings is, you know, another one that can have just these like 8 to 10% moves in a day, and then literally within 3 days you retrace the entire move. So yeah, I think until some of these moving averages really start to kind of change here, you can see the 50-day moving average has kind of been resistance multiple times here. But yeah, I really don't use moving averages as like resistance or support. It's generally just to gauge the trend. You know, this medium term trend, which is shown by the 50-day, you are starting to finally curl to the upside. Which literally, I mean, if you look back, we've been declining now since October on the 50-day moving average. So if we are starting to maybe curl to the upside, you know, maybe this does start to trend over the next few months. But for now, we're just kind of stuck at this really important level to get through. So, and you can see here, pretty much since January, we've done nothing but just go up and down with these lower lows. And finally putting in the lowest low in March, and then we have had a couple higher lows. So could the tides be turning? Maybe, but you definitely want to kind of see the 20-day start to really accelerate here, because you can see that the 20-day has been increasing a couple times on this way down. But the 50 is a lot less sensitive. So, you know, once this thing finally actually turns and starts to increase, that's when, you know, you may see the trend really start to reverse here.
Let's see. We've got a question in the chat, Jake. Steve, it looks like is his name, says, is there any way Jake could explain the volume profile and beige gap down box that is on the TrendSpider chart? Not necessarily its function, but the script or tools that are used. So I don't know if he's asking you to explain like the actual code or like what's going on, but maybe you understand better than I do.
Yeah, I mean, the volume by price is really just where volume has occurred since a specific point in time. So this vertical line here, as I'm moving it, is measuring it. This is the start date of your measurement. So right, like if we're measuring from the September high, all of these volume bars are kind of registering where volume has been distributed or where volume has occurred. So a lot of volume is occurring down here. And then as you get higher up, you know, it changes. Now, it will also change, the look will change if you go from log scale to linear, right? So like each one of these volume bars is now an equal price range, because that's all these volume bars are. They're just measuring, you know, how much volume occurred within, in this case, from around 27 up to around 2750. So, you know, each one of these bars has different increments. Now, if you change this to log scale, you'll notice that these bars are different widths. That's because the scale, you know, using log over linear changes the distance on the y-axis. So in this case, you know, explaining it, that's kind of what it is. You know, the thing that maybe is a little different from the way I use it versus other people is I'm always using an anchor point. So a lot of the time you'll see somebody with a chart, and you won't know, okay, where are they measuring that volume profile from? So the anchor point, this vertical line, is probably the most unique thing on TrendSpider as far as the volume profile goes, because you can easily just move it around. Other platforms, you have to go in and either like type in the date, or, you know, you're only using pretty much this candle here. So as you move the chart, the volume profile is constantly changing because this candle is essentially your start. So if I move it all the way over here real quick, the volume profile is going to change. Whereas I have it locked in with this vertical line, so it's not changing as I move the chart around. Based on the question, I'm not sure exactly if I answered that, but that's essentially kind of deriving how the volume profile, volume by price tool works on the platform.
Nice. I think that was a good explanation. All right, so Jake, I know usually we're looking at charts that we like, that are, potentially setting up for a breakout, potentially bullish, but let's try to find some charts that you may think could be setting up for a little down, for a move to the downside, we'll say.
I mean, if we want to be like completely unbiased and just look at price action, like, Penn technically, has this symmetrical triangle, and it is in a downtrend. So, some people may just call this a little bit of a kind of a bear pennant. So I think any chart that we're going to look at with any type of, maybe this goes lower, is you just have to have your levels on if it's breaking or breaking out. So, for Penn, if we did break down below that 39.25, then, this could be a bearish setup. As far as other names go,
what about like
how
about like
one that's a little interesting, but it is.
Which one is this?
This is AMD, but this is more of like a monthly kind of setup here. So you've got this resistance here, or excuse me, the support. And you could probably draw this a few different ways. I mean, and it really depends on if you're on log scale or linear. And that's the thing about technical analysis. It's so subjective, right? So like, let me just redraw one of these. So you could draw it from here. You could draw it from that other point. I think the point is like, if you draw it from either one of these points, you're kind of breaking these trend zones. And so the fact that we do have a monthly open below this line, below this zone, definitely a little iffy. But at the same time, you do, and I guess if you wanted to kind of pull a pattern out of this, you have essentially this descending triangle forming here. So, I think all of it has to do with if then, right? Like if we break above this descending resistance line here, then I would probably flip bullish pretty quick. But for now, it's kind of stuck right in this area. And it was looking really good last week. And then we just had like that 8% down day after Barclays and Goldman had these downgrades. So, descending triangles can be bearish, but if they do break to the upside, they're actually very, very bullish setups. So it's definitely one of those things where you just kind of have to wait and see. But this may be one that is trying to top out. And if you just kind of turn on the moving averages here, you'll kind of see that the 50 and the 20 are maybe starting to lose their slope a little bit. They're kind of starting to flatten out. So, that one potentially, but that's on the monthly chart, right? This isn't like a setup that's going to play out in 2 days. So I think it depends on your time frame for sure.
Yeah, I mean, and I was just looking at some other, like even Tesla we were talking about earlier, like eventually, and I said this earlier, I was like, I'm not going to go out here and buy any puts or anything because I've done that. It doesn't work out for me when I do that. But anytime I see a stock that's up like 20% in 10 trading days or whatever, it's like, all right, we're due for a little pullback here at some point. But obviously Tesla is a different animal.
Yeah, I mean, Tesla is something else. Yeah, so I mean,
take all your rules and then throw them out the window when you're talking about Tesla.
Yeah, but it can respond very well to technical setups. But the thing that I'd be looking at on Tesla, you've got this monthly ascending triangle. So you've got kind of these higher lows here, and then you've kind of got some of these highs at the same exact area over the last several months. So if we can break above all-time highs, this would be a pretty strong monthly ascending triangle breakout. On top of that, if you look at the seasonality going into April, which we're in now, April has the third highest win rate of any other month. So it is a pretty strong time of the year for this stock generally. And on top of that, you do have a relatively decent pattern here, your ascending triangle. When those break out, you can definitely get a move. If you're trying to kind of figure out a price target, if it did break out, this is when you definitely want to throw out the fibs. So, a lot of people say, well, look left, and that would be your price target. Well, in this case, if you look left on Tesla, there is nothing left. It's at all-time highs if we break this area. So, for me, 1,500 to 1,600 would be a target above if we really started to break these previous highs, which just seems crazy because it's I think it's definitely back to $1 trillion company, but it's moving pretty quick. And then on the daily chart, yeah, you just kind of, straight up, I still remember people trying to short this, years ago, and it's just, I wonder if there's still anyone actually in there,
like
but
writing the short or like fully shorting the stock, not just buying puts.
Yeah.
So that's how whenever I say like, oh, I'm gonna short Tesla, it's like I'll buy like one weekly put that's like pretty cheap in case the stock drops like 10%, which it has done before, but I'm not actually like shorting. Like I'm not setting myself up for that much of a risk. I'll take the risk on of whatever I agree to pay for that put contract, and that's it.
Yep. And you had a bunch of institutions actually shorting it, and that's I think what fueled a lot of these bigger moves. People either love or they hate Tesla, and so you do have some very strong opinions on this stock. So, but for now, pretty textbook. You just had kind of a flag breakout here.
That's what I was saying earlier, man. Like it's like I feel like I try to stay pretty like middle of the ground especially when it comes to like I try to see both sides of things, but Tesla specifically, like I just see people get so caught up in it on both sides, right? Like the people that are super big Tesla bulls, like legitimately say things like, oh, like this is going to be like whatever. They just make like outlandish claims of what Tesla's going to do in the future. Like every car you're going to see is going to be a Tesla. Tesla's going to make X amount of money on its like robo taxis, whatever. And then flip side, you have the bears who are like, Tesla's going bankrupt, all this stuff. And it's like, well, where's the truth? Probably somewhere in the middle, right? Like, will it be the biggest company of all time? Maybe. I don't personally think so. I think Apple is pretty big, but do I think it's going bankrupt? No. So I don't know. I just find it.
I think a lot of the time Tesla can literally just be a proxy on betting on Elon Musk. I think a lot of people kind of look at Tesla as, a way to bet on Elon Musk's success in the future, and that's kind of the vehicle they use to bet on that. So we'll see what happens, but this is a really strong day. It's it's looking like the January highs are definitely going to be tested. Not necessarily all-time highs in January, but we did have those all-time highs around 1250 in November. So if we do break that January high of around 1200, then yeah, all-time highs are your next stop.
Hell yeah. All right, just catching up on the chat, seeing if we were a few minutes over. If you got to run,
yeah,
Jake, by all means.
I actually do have to run. I have a call I completely missed on. So, but yeah, we will talk to you next week.
Sounds good. Again, the link to TrendSpider is in the description. It's BZ25, correct, is the code?
Yep.
All right, BZ25 on trendspider.com for 25% out. Go check it out. Jake, always a pleasure to have you on. See you next week.
See you guys.
All right, y'all. L Duke says it's like betting on Michael Jordan. You'll regret betting against him. Yeah, shoot, you can't argue with what Elon's done so far for shareholders and for investors. The question is, just at this point, see, I don't know. Like I said at the top of the show, I am a Tesla shareholder, but I'm not someone who thinks, oh my God, Tesla's going to, I don't know. I just think some of the claims that some super big Tesla bulls make are a little out there. Nor do I honestly really like Elon Musk kind of, irks, like it just frustrates me again a lot of times with some of the things he says and does, but you can't argue with Tesla's stock returns over the past 5 years, bottom line. And that's why I'm pretty much done. I'm done ever trying to buy puts on it. If I, even if I'm trying to just hedge my existing position. But yeah, like Jake said, we are on our ways back to all-time highs in Tesla. We're at Let me just share my screen. We are at we're at almost 1150. All-time high is 1243. So almost less than $100 off the all-time high on Tesla. Oh, I see Money Mitch hanging out. Money Mitch, bring yourself on if you want to come on and talk some Tesla. He's holding a donut. I want a donut. Oh, he wants to look at Krispy Kreme. You want to look at?
Do not question Elon. But yeah, D-Nut, what's up? Krispy Kreme? Can I get it moving? This is a Krispy Kreme donut. I mean,
where I'm from, there's like not a lot. Like it's like really out of the way to get to a Krispy Kreme. Like they're like it's like 20. It was like 25 minutes away from my house growing up. So we would like only sometimes make the trip for a nice box of like freshly baked or I don't know how to make donuts. Freshly made Krispy Kreme donuts. But I saw one, Mitch, last night here in Michigan that's a lot closer to my place here. So I put it in the back of my head and I was like, that's good to know that there's a Krispy Kreme not too far away from me. I don't know if Luke knew that, but maybe I'll bring in a box of Krispy Kreme donuts at some point.
I just got a new one here in Colorado Springs. It's the first one in Colorado Springs ever. And, you know, they're going crazy over here. But I know the trick. I know the trick. So there's two lines, right? There's lines for the assorted. There's line for the online order. I just walk up like I have an online order, and I get to the front, and I'm just like, I just want a dozen glaze. I don't need anything special.
Takes them 2 seconds, yeah.
And then just reach back.
The problem with grabbing a dozen glaze from like Krispy Kreme is I'd like be driving home and like 6 of them are gone already.
Well, let's just say 6 of them don't make it past an hour. I agree with that. Cheers to that.
Yeah, man. I was talking some charts with Jake. We talked the Tesla news at the top of the show, just about, you know, the deliveries, everything going on there. Oh, here's a topic that I haven't gotten to yet today that I wanted to. All Chinese names are moving today, Mitch, and we do have sector-wide news. Essentially, just that shares of several Chinese stocks are trading higher following a potential rule change which would allow Chinese companies to share sensitive data with U.S. regulators, thus lowering the risk of delisting. So bottom line is, for a while, a lot of Chinese companies have kind of been hush-hush about a lot of metrics in terms of numbers. We, of course, saw the fallout of Luckin Coffee a couple years ago when essentially this company was traded in the U.S. and it ended up just being like everything was falsified, all the accounting and everything. So basically, this is where China's basically coming out and saying, "Hey, no, we want to be friendly. We want to have our companies on the U.S. exchanges. What do we need to do? Do you want to take more looks at our financials and stuff? Sure, fine. You know, we can do that." So it just sounds like more and more that the Chinese are going out, or the Chinese government is going out of its way to. And again, at least seemingly, you know, we'll know in time, like that they're trying to play nice and that they're trying to do what they can to have these stocks like Alibaba, like Didi, like JD, like have these stocks stay on the market.
Yeah, the vehicle names, NIO.
Oh yeah.
EV.
What about BYDDF? You know this one, Mitch?
Yeah, exactly. So I mean, there's tons of these, right? Tons of companies that have always gotten the question, but it's Chinese, right? And what was that question was? It wasn't the question of the country itself. It was the question of their accounting, right? And so if they could put that at ease, would you take more Chinese stocks? I know I've said it before. I've gotten to that point where I'm like, man, I don't know if you can even own these. But now,
I mean, like, you can ask the chat. I was bullish Baba when everyone else didn't want to touch it with a 10-foot pole. I just at the end of the day, like, look, here's been my
up right now. Right now, let's look at the daily on Baba.
On Baba, all right, I got it.
Really nice daily.
Here's been my thesis on Alibaba, on China in general. China's not going anywhere, right? It's by all measures the second biggest economy in the world behind ours and growing at a faster rate than ours. So a lot of projections have like China GDP passing the US's by 2030 or whatever. And China's our biggest trade partner. So like the fact that a lot of people were thinking like, oh, we're not going to have any like trade relationship with them and all their stocks are going to get delisted. It's like, okay, like that's a possibility. That's a possibility. But if that happens, I'm not going to say we're all screwed. I'm saying it's not just China names. The whole stock market's going to be getting crushed because it would be a terrible thing in the short term for our economy. I think long term, I agree that we should try to get some of our, reliance and manufacturing reliance off of China and bring some of those jobs back home. I'm all in support of that. I'm just saying if some big fallout happened overnight where it was all of a sudden we don't have a positive trade relationship with China, whether you're talking stocks, whether you're just talking overall economy, we would see some bad fallout from that. And I just don't see that happening. I'll always bet against some like big if that's the event that you're betting on when you're saying China's going to go down, that we're going to fall out, I'd bet against that. Right, because what I'm betting on is our relationship with China staying the same as it has been over the past 15, 20, 30 years. And more times than not, things stay the same rather than they drastically change.
Hey, you're an optimist, my friend, and there's nothing wrong with that. If anything, I would say recognize that you're an optimist and stay with that, right? I mean, if you look back in times of any time that we had fear or in anything, and usually in the market, in the long run, optimism has won, I think, in the market than pessimism. Let's take a look at Baba's here's setup. And if you can take a look how far back you can kind of draw this trend line. It's not perfect, but it is coming into this zone now. And you're talking about a drop since back in the 30th of October 2020, going into all these kind of 2021, it just declined. Now we're starting to finally see that balancing out. And we did close that gap down here. And that's what it was, I think, important. Once you got that close on the 31st of March, that gave us a good level to go off of. Now that 108 seems like a good level, and you could look for that breakout through the trend line. And from there, I'd be looking for a move up there towards maybe 145s. But it's an interesting chart right here. I haven't taken any, so I don't have any, but I can tell you right now, that is an interesting setup now.
Yeah, and I think that is a good point, Mitch, that you made on just like I always try to see like the silver lining and stuff. And I learned that the hard way actually, because one time I wasn't optimistic was right on the onset of COVID, and that was kind of how I got into option trading, right? Because I was in the markets, but then I was like, I ended up being right about it. I really thought, because I still remember it perfectly. It was like the beginning of March, end of February, right when COVID was hitting, and I was like following all the stories from across the world. Italy had just canceled all their soccer games, all the Serie A games. So Juventus, all that. And Italians love their soccer, right? That's like us. That'd be like us canceling NFL on like a Saturday night, right? You have a full slate of NFL games and they just decide Saturday night, we're going to cancel this. And then I started thinking, I was like, this is a little bit different than, Ebola or Zika. Like we never saw this with those. And then I would turn on CNBC and the guys on CNBC were like, oh, no, it's fine. Don't sell your stocks, like whatever. And I was like, I don't know. So again, this was like some of my first times options trading, bought puts on like Chevron, some other stocks that I thought would get hit by COVID, and ended up making a lot of money. But then, Mitch, I lost it all because I stayed short because the market rebounded so quickly. And I was like, no, like it's got to come back down. Like, the whole world is shut down. And I was one of those guys that like once the market had already rebounded, I took and I was working at a golf course at the time. I had taken like my paychecks where I was getting minimum wage and turned it into like thousands of dollars on these puts and thought I was like balling, was like, oh, whatever.
You
and
were
just stayed short.
Right?
I was for a couple weeks and then just lost it all, staying short. And then I learned that lesson that like, hey, over time, I'm going to make more money being long than I am being short. But so yeah, I'd say like 98% of the time I'm bullish, I'm optimistic, but then there's always a part of me that's going to look out for, that next black swan event that could make the market move down. But I don't think it's now. I mean, I've been seeing, I'm sure you have too on Twitter and whatnot, people calling for a big recession and a big market crash and stuff. And I don't know. I don't think things are that bad right now.
Hey man, stay optimistic. There's nothing wrong with it. And then that one time that you changed, you saw it. You could have taking some profit. But I mean, no one would have known that that was a V bottom. I mean,
Right.
there's not many times that you get V bottoms. Let's just be honest. You can look back,
and it was. I mean, people threw unprecedented around. You know, oh, we're in unprecedented talking about COVID, but at that time, that much money coming in from the Fed and how they were, you know, like pumping money in the market really had never happened before. So no one knew how the market was going to react. But in retrospect,
we hadn't heard those printers go brrr just yet.
No, we had never heard those. So obviously, in retrospect, hindsight's 2020. I would have made a lot more money taking the money I had made off the puts and then just putting them long. I could have just literally been like, yeah, I'll just buy the S&P 500 right here, and I would have like tripled my money. But instead, I lost it all. So it is what it is. It's an expensive lesson, but I'm always of the camp that like if you can afford to, and you're trying to get into trading, like mess around, and if you lose some money, like you'll learn quickly what you're doing wrong, and try to improve the problem. You know, it's just you just want to stay smart about it. You know, I've seen too many stories of people, you know, whether it's options or just, you know, day trading in general, just end up losing money they can't really afford to lose. So I would always encourage people to just trade with what you're able to lose, especially if you're newer.
Yeah, and one of the things that I like to do is I would say figure out a way to have some money into the game, but also try to play the game when you're a beginner. When you're a beginner, it's not about the big gain. First, focus on the big return percentage. Trust me, I know you're gonna strut your stuff on Twitter. You're gonna be like, I made 1,000% winner. Really, it might have been $10, but hey, the focus here is not necessarily on how you're getting your return. It's the process that you're going about it. First, make some money, learn how to make some money before you actually increase that risk into the market, because that's an easy way to just give it back. I think in your case, you realized that the pressure got to you intense because you were using all your money. And usually I'll tell you, when you're pushing those kind of limits, majority of the times luck isn't going to fall on your side. But let's get back to these Chinese stocks. I'm going to keep watching, of course, that Baba setup. I was looking right now at JD. That one's looking good off that bottom around 58. And we can take a look at PDD also. I saw that one coming off today. So take a look at that setup. Very similar setups. You got like trend lines that you're running right into. You have some bottoming action on this one off the 40, and then you have levels to go off of. So I really don't think that traders are going to look at these too negative anymore, as long as you keep getting those catalysts to come out in China where the audits could kind of change around. Let's get out of these and look at the auto ones, because I'll tell you one thing. NIO today up 7%. And if you take a look, all three of the auto names have been going on up, and all three of them surprised on their deliveries. So XPEV doing well, bouncing back. Also LI smashed it. So we're going to keep watching this one. This one's still up on the day, coming down, but up on the day as it gapped up. We're going to keep watching these auto names. And I've been seeing a trend that we can start focusing on, which is kind of EVs coming back into favor. We're seeing Tesla, at least for me, lead that party, right? We just talked about Tesla. Their deliveries were good. You're seeing Chinese auto manufacturers being good. And so I'm wondering what's going to happen with sleepy Ford and GM here, because they're kind of sleepy right now. They're just going sideways. So what do you think about these trades, Aaron?
I think as far as
Ford,
as far as trades, I'm not that sure. I think like as more of like a long-term trade, like I'd look at Ford here for like a year out trade. You know, who knows? Maybe I'll look at some leaps on Ford, like year out call options at like $25, because I do think, Mitch, I do think here in the next year we're gonna get some of these problems between the chips and not being able to produce enough cars. I think we're gonna see more and more of those problems be alleviated, to the point where like Ford is pumping out near full production of its EV trucks and stuff, and they're just flying off. So I don't. I'm bullish Ford here long term. As far as a trade, like who knows? We could drop another 10% in the next month. Like I have no clue in the short term what's going to happen. But also, well, speaking of Tesla, I talked about this earlier. I don't know if you saw this. Did you see Tesla changed how it classified deliveries from last quarter to this quarter in order to ensure it was met its
above the mark. I was wondering about that. That's a good catch there. I honestly didn't catch that this morning, but I'll tell you one thing. I was wondering that, and I even mentioned it on pre-market prep. I was from what I heard, at least the expectation was from them not to meet that bar, right? And so if they changed that delivery just to get it up that bar,
well, it's not. I mean, we don't have full clarity on it yet. This was on. I found this on. I saw it going around Twitter, but this is on Gordon Johnson's, which of course he's like the biggest Tesla bull. So you got to kind of take what he says with a grain of salt because he's so biased. But this isn't, something he said. This is just objective. This is from the report 2 quarters ago. Our delivery count should be viewed as slightly conservative as we only count a car as delivered if it is transferred to the customer and all paperwork is correct. Final numbers could vary. So this is 2 quarters ago. They're basically saying, Mitch, hey, we might underestimate our deliveries because we're being conservative and we only count deliveries if it's final, cash in hand, whatever. And then this is the one that came out over the weekend. The Tesla vehicle deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly. So they're already saying the bar, saying, hey, just because we did this many deliveries, don't expect financial results to essentially like be in line, which depend on a variety of factors. So they essentially just took that clause out, saying what they consider deliveries. They took it out to make it more, it's more kind of ambiguous what exactly a delivery means at this point.
Leeway in there,
and so they gave them leeway so they could say, hey, we beat the quarter before. And then so of course now all the headlines are all the headlines are record deliveries, but the question is, but what's a delivery now?
That is true. One of the areas that I'm seeing start really getting strong is in different areas in EV. So one of the things that I've always said about the electric vehicles is that I think they're really going to take off with certain things that are needed, right? We need the long range because of the kind of concern about running out of miles. I don't know if you've ever been with someone that has a Tesla or something, but give me 1 second.
Yeah. Yeah, so I'm seeing some of the chat here. It's Kyle asked, should I like the video? Let me make this easy for you, Kyle. Yes, you should like the video. Hell yeah, you should like the video. Just smash the like. It's free. You got a little thumbs up. It should be gray. If you click it, it turns blue. It helps us. It helps us, it helps the YouTube algorithm show our videos to more people, so that way we can get more people in the chat, make the community bigger. Yeah, look at Mitch right there. Look at that thumb. Just smash that thumb. Yeah.
All right.
And then Mitch.
Yeah, I'll get back on it.
Yeah, Brian wants to look at Apple.
All right, we'll take a look at Apple. I'll wrap up this EV talk. But one of the things that I've always want to say, and I want to give this theme out there so people don't miss it. I'll talk a little bit more about this on Money Mitch. If you guys want to talk about this, you guys can catch it later. I'm going to do a little special with At the Close going into our highly unreleased. But take a look at the different things that are needed to really capture the EV. And I think for the consumer, and I don't know about you, Aaron, but for me, I really want to see the autonomous driving. That's really what's going to get me to get into an EV. Really, the EV factor doesn't get me inside one. I like my gas vehicles. I like going fast in my gas vehicles and kind of hearing the engine.
Well, Teslas can go pretty fast.
Yeah, but
I hear you. I hear
Uh-huh.
you, but I want all. I don't want just EVs to be autonomous. I want all of you. I mean, do you know how many freaking bad drivers there are out there?
Yeah, exactly. It helps us all, right? It helps us all out, right? And so I'm paying attention to this. And I think this is needed first before you get that big drive into EVs. And so another area is the charging, right? The charging stations. You're seeing today EV Go make some good moves. We could pull up the company, but I know that was up about 9% earlier. We had that on the list makers And EV Go, you're seeing ChargePoint have a good time right now. You're seeing battery makers like QS starting to go up. Look at QS, how it's been working on the daily chart. It's starting to work its way back on up, right? And so keep your eyes on these, because I feel like these are going to be the plays that are going to be moving first before you get a big EV wave. So they're kind of like the leading factors in my eyes. That's why I'm always paying attention to the story. You could see LiDAR plays moving today. LAZR is my favorite, moving up about 5% today. Why is it my favorite? Because it has deals with NVIDIA. And I mean, I feel like that makes it a favorite. So I'm going to keep this one on watch. We'll see what happens and continues to happen in the different kind of windows inside the EV space. So, of course, keep your eyes on also lithium plays. Lithium is, I just took a play on lit today, and that one's looking good right now. But, I mean, if you look at it, all lithium players have been doing well. MP Materials doing well. A whole bunch of these like LAC, Lithium Americas has been doing well. And so I'm going to continue to watch.
Wait, 1 second, Mitch. I'm getting
components.
Just give me 1 second. I'm getting a random call.
Go ahead. Take it, man. Just take the call. Take it live, right? What do you guys say? Take it live? Smash the thumbs on up. You guys you guys want to see Aaron?
I thought it.
Offering a phone, internet, and cable services in your area at a
Done.
very affordable price.
You see, they're trying to scam you. They're trying to call you and scam you, AB. They said you need faster internet, man.
I know. I thought maybe it was a legit call because it was coming in from a Detroit number. And I was like, oh, but then it ended up being just.
My favorite battery company is Kodak. Thanks, Christian. Thanks, Brad.
Kodak does everything. If you're looking for the best vaccine, NFT, EV play, check out Kodak.
Yeah, that company,
Camera,
man. That
printer, you name it. They're doing it.
This
you want a sports gambling play? Kodak does that too.
Oh, Kodak. What would they get into the other day? I saw a headline.
EVs.
Oh, it's EVs. It's EVs, Yeah, now we're EVs, baby. Who's the CEO of this guy? I gotta get an interview with him.
I mean, I don't know.
I would have fun with that one. Let's go ahead. Let's pivot here, guys. Let's go to Apple. Apple was asked upon us, and what do I think about Apple? So I think it's all about what Apple can innovate into. I think at this point in time, I really do think they're reaching kind of like the max market in their iPhone. I don't think they're going to capture too much more with iPhone, right? And so I think what's next for Apple really to like master, I think there's two areas I think that you got to be looking out for. And I think they're kind of closer to then, let's say, that third, where it could maybe be that EV car going into Apple. I think there's two areas you got to watch. There's streaming and gaming, like either streaming or VR, AR type technology. What do you think about that, Aaron? Do you think this is probably where they're leading towards an innovation?
I hear you, and I just know historically people have said that time and time again about Apple, that they've run out of like ways to innovate the business, and they just always find ways to. So whether it's something with an EV and cars or autonomous or metaverse, whatever it is, I have no faith, or I have no doubt that Apple will find a way to continue to grow, because that's what it's always done. And it always, even like go back like 8 years ago, right? 2014, that was a common criticism of Apple. It's like they've got their MacBooks, they've got their iPhones, but like they're not doing anything new. People like their shit, but like, so what? What are they, you can't invest in something that's just going to stagnate and stay there. And then the stock's obviously, I don't even know what it's done since 2014, but it's gone up a bunch. That's the point.
Always.
So I don't know. I don't know. I know Apple's kind of famously hush hush about its car plans, about its EV plans, but if I had to bet, I'd say Apple will find a way to continue to innovate, to continue to, more importantly, make a fuck ton of money. So I'm going to continue being an Apple shareholder.
Yeah, I have no doubts in that. I'm just more along seeing what could be the real driver going forward. And I don't think it's going to be like a new iPhone or anything like that. I think what really the drivers that they can get into is having some real high-end movies or something like that. Because if we're looking at it, I mean, we just saw, right, best movie was a streaming movie.
They won with Coda, so that was a big deal for like all streamers, not just Apple. So you'll see, Netflix, Apple,
Exactly.
Amazon continue to put more and more money into this content.
More and
but
more.
I think I don't know. I think it'll take some time to figure out exactly how lucrative the content creation business is, because right now I do know that Apple, Amazon, and Netflix are both spending a lot of money to create this content. Which, I mean, look, they're smart people running those businesses. I assume they've crunch the numbers and determine it's a good business decision. But if they continue to like spend millions and millions and potentially even billions of dollars just creating content, who knows if that'll work out long term.
Yeah, I think one of the things that comes down to that is just what do we watch when we want on our phones, right? And I think they know that. They get that data. They know that we hang out in what majority of the time? Some streaming service. So I think that's why they keep doing bigger and bigger investments. We'll continue to watch. Daily looks like a short with shipping rails pulling in, but an indicator of sales and products.
Well, I was just saying that's a good point. I haven't thought about that from Brian, and just that if you guys have looked, all the transport prices, whether it's shipping, rail, whatever it is, have dropped tremendously. So Brian's saying maybe that's a sign that the demand for sales is dropping as well. But all right, Mitch, it is a couple minutes after 2,
We'll see
so
what
it's our time to wrap. We are going to be doing Moon or Bust right now, so come join us on Twitter Spaces.
What?
Right? Oh, it's on YouTube.
Yeah, right here.
On YouTube.
You gotta go nowhere.
Right, don't gotta go nowhere. This video will redirect you automatically to Moon or Bust, where they will be talking about Bitcoin mining stocks. Fantastic. All right, guys, stay tuned. Yep. Stay tuned. This video, again, will redirect you straight to Moon or Bust. Is it... which one is it, Logan? This one? Trying to find the video. Breaking down the 6... I don't think so. All right. Give us 1 second, guys. We're doing some technical... I don't see it. All right, that's a problem. All right, we're gonna give this a second to figure out.
Yeah, I got it on there. It's that breaking one, right?
What breaking one?
The
breaking down the
625.
Oh, he says yes, it is. All right, perfect.
Boom, I got it. Let's do it.
All right,
let's
beautiful.
go.
All right, guys, smash that like if you haven't already. I'll see you guys in a few minutes on Moon or Bust. Oh, did he really? Trump got his Twitter account back? Hell yeah. Thanks, Elon. Twitter's about to be hella funny. I just wish he had his account when the Will Smith slap happened. He would have had a great take about the Will Smith slap. Also, his whole I hit a hole in one and he put out his press release. He would have been all over Twitter with that. All right, guys. Here comes Moon or Bust.